entrance music and their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly 1/8 of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission, track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, The southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double the number of people living in coastal area will double by 2060. So knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sales to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, It's a common feature on our coastlines too, and that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously, if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive...
Hello, traders. Are you ready to trade euro? I'm looking to sell euro. The price I'm looking to sell, 121.57. Okay, so if you're looking to trade euro, here is your chance. You can place an order. You can stay with me, and we will go through this trade when it will get filled. So at this moment, I placed an order to sell short at 121.57. Okay, I'll speak to you later after if we will get filled. I'll speak to you later, and we will go through this trade, and I will let you know what's going to happen next. Stay safe.
As well as the composition of the cement mix, e-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call it biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in the case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
Okay, guys, as you can see, position open on euro at 121.57. This is short position. I will point out, all of you guys who managed to sell short, stay with me and we'll go through these trades. If it will go, as you can see, it moved higher, so you still have chance to enter position. Okay? I'll speak to you later.
Yeah, the president also continued to make his case that people need to get vaccinated, saying that employers need to step up to get people vaccinated. People on unemployment must take suitable job offers is something else that he mentioned. He said we'll provide help for people struggling with childcare. He made it a point to say, hey, these monthly job reports that we get once a month, they provide a snapshot. And he talked about how many jobs have, I hesitate to use the term been created, right? Because these are jobs that are recovered. But he said how many jobs have been created in the first few months of his presidency versus in the last 3 months of President Trump's presidency. And he also talked about the importance of vaccination and the connection between vaccines and job growth, and how when more people are vaccinated, more people go to work because they're not afraid.
Right, exactly. And this is certainly something we'll unpack. Happy Monday, everyone. Of course, this
is Monday, Carol?
It is indeed. This is Bloomberg Business Week. Carol Master along with Tim Stenovic. It is Monday, May 10th, 2021. We're going to continue to talk about that pipeline attack and hack, if you will, the Colonial Pipeline, and we'll get into that certainly. We're going to talk about the markets, though, too, because tech stocks once again weighing on the overall trade, despite we've got the Dow topping 35,000 for the first time. So it really is the tech area that's dragging the market, and particularly the NASDAQ 100 lower today, but that not necessarily is happening in the broader market if you look at the S&P and the Dow in particular.
That's right. We're also talking a little bit about the hustle, Dogecoin, right?
You all saw SNL. We're going to definitely dig into that. All right, let's get a check, though, on your top business stories. A look at that trading day. Here is Doug Krisner in for Charlie Pellet on this Monday. Hey, Doug.
Hey, Carol and Tim. Hi. Markets right now seem to be continuing to debate this idea of rising inflation and whether or not it has the potential to kind of interrupt the rebound that we have been seeing in growth globally. Higher inflation, as you know, is a particular threat to information technology firms given their longer view on revenue. That would account for some of the weakness that we are seeing in tech today. At the same time, shares in Alphabet and Facebook were cut to neutral from buy over at Citi. Now, the firm is saying that strength in internet ads was very robust over the past 2 quarters. However, Citi says growth is likely to decelerate given difficult year-over-year comparisons. NASDAQ Composite right now slumping by more than 1.7%. But as you pointed out, Carol, Dow Industrial Average now above 35 grand for the first time with a gain of about 0.7%. North America's biggest petroleum pipeline is planning to restore deliveries by the end of the week. Talking here about the Colonial Pipeline, the firm told the White House its system has not suffered damage after that ransomware attack, and it can be brought back quickly. I'm looking at active gasoline futures right now in New York, higher by about 0.3%. But overnight, this contract was up by more than 4%. 10-year Treasury right now with a yield of 1.60%. So we're moving up just a little bit in yield terms. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. I do want to clarify that the president said no evidence that Russia was involved in that pipeline hack, but he did say that the dark side, the one behind the attack, may be located in Russia. So just a clarification from something I said earlier. All right, you're listening to Bloomberg Business Week. Let's get to the Market Drivers Report. And let's set the Business Week agenda with us. Kriti Gupta, she is Markets Live reporter at Bloomberg News. She's on the phone in our New York City bureau. Standing right next to me in our Interactive Broker studio, Mike McClone, commodities strategist. Kriti, let's kick it off with you. Doug, given the numbers, Dow at a record, but for tech stocks, not such a bullish day.
Absolutely not. You are really seeing that underperformance today. And what's really interesting is that it's on a day where you are, of course, coming off of, some not so great payrolls data last week, not some great ISM data last week. A lot of the expectation going into this week was people would simply buy the dip. And instead, you're seeing the underperformance really continue here. And it's really not enough to even the cyclical outperformance, is not enough to really lift up the benchmarks. You're right, seeing that heavyweight story right there. The S&P 500 down 0.3%. And something that really struck me, actually, was what a strategist said. I read this in one of our pieces by Jaron Wittenstein, our stocks reporter. He said that tech unwind, it has nothing to do with the economic reopening. This is purely independent of that. Really speaks to the idea that that reflation rally, those concerns that we had about tech responding to inflation, maybe it's just kind of an isolated story.
Hey, Mike McGlone, come on in here and talk about the commodities story here, because there is a concern that surging commodity prices are feeding concern about whether inflation is going to derail growth here. What's going on with commodities right now? Why are we continuing? I hate to use this word over and over again, but it's transitory, you've said in the past.
I'm going there. I'm going to transitory. So look at today. Crude oil was doing fine, and the minute the stock market went down, what happened to crude oil? Boom, it dropped. Copper dropped. The biggest inflation problem we have right now in commodities is if the stock market drops, commodities, crude oil, copper will drop at double the velocity, almost a guarantee. Everything's being lifted up by that. Now we're seeing a bid in materials, copper, lumber. That makes sense. But look at the economy going forward. There's plenty of timber. We just have to convert it to lumber. And
easier said than done.
Yeah, easier said than done. But the problem is, going forward, look what happened with this pipeline today. When we have issues in the future of shutting down potential gasoline and waiting in lines and stuff, people say, "Well, I'll just plug in at home. I don't have to worry about."
It's my favorite line of the day. I heard you this morning say it, and I'm like, I've been thinking about it all day. I walked into the office saying, "You know what Mike McClone said?" Because it's a different world. It's not like the energy shocks we've had in the past.
And you're not saying plug in your car at home. Okay.
Plug in or work.
You're saying plug in or work.
A lot of people have to go to work. I mean, people are less used to using computers, yeah. But it's just they don't have to anymore. And then plugging in the cars. It's just a matter of time that cars are going to become more cost effective. And what's happening with this pipeline is, remember, that's a source of energy that was actually converted from the sun, taken out of the earth, and then transported to gasoline tanks, right? Well, with electric cars, it's just direct. I mean, it's so much easier. So that's where we're going, and it's happening rapidly. So that's macro, big picture. In the short term, all this is going to do, this I see it in the screen, is this going to give people incentive to increase supply. And it reminds me of 2008. Remember we had that spike to $4 a gallon, and then everything collapsed. It just reduces consumer spending. It makes people think, oh, I have less money for gas, but now they don't have to drive as much. So I'm really worried that this, to me, is just more incentive for suppliers to bring in more supply, shale to come back, and more incentive for people to buy electric cars.
And yet energy is our top performing equity group here today, Creedy.
It absolutely is. Utilities, energy, consumer staples. It really tells you that the trade here is coming after yield. People are looking for yield, and those are the three sectors that provide it. And if you actually look at some of the rotations we've been talking about, what we used to see was this idea that energy, financials, industrials, materials, those were what was leading. But as you start to see a lot of the U.S. trading session take on more time, more later in the afternoon, you start to see those yield-friendly sectors really rally instead. And it's pretty interesting to see that kind of transformation from 9 a.m. in the morning or 9:30, excuse me, in the morning to 4 o'clock, because it really tells you what people are thinking. They're going after the returns. You start off with the reopening trade, you end off looking with some yield. The question here is, at what point does that turn back into potentially coming right back to tech and rotating further?
Go ahead, Carol.
Well, so inflation, I mean, I'm so bored of talking about it. But I mean, it's like...
She said it, I didn't.
Well, it's just, I don't think it is a concern. And I do think at some point, these imbalances between supply and demand, I know I say it a million times, I know Tim's sick of me, I think they'll figure their way out, right? As there's more demand in the economy.
Well, the cure to higher prices, they say in commodities, you've heard this before, is higher prices. So the key test will be this summer. When the Corn Belt production comes on, unless we have a drought, I expect we're going to be talking about massive piles of excess of grain, corn piles. And unless we get that drought, we're going to see that supply come on, because it's been the bane for commodities, not even forever, but certainly less sticky.
Lumber too?
Lumbers, you have to convert the timber to the lumber. So that's a little more about the issues we've had issues with Canada and excise taxes and things. But food, the key thing we all need is food and energy. Massive elasticity of supply. This summer's a key test. And right now, crude oil bumping around 70. I look at it, well, it's been going down since 2008. It's the upper end of the range. I expect supply to come right back, and demand's just not there anymore. We're not going to, 5 years, the average EV is going to be the same cost or less than average internal combustion engine.
Supply comes down.
It's almost like he's saying transitory.
With a capital TRANSITORY. We got to leave it there. Hey, guys, thank you so much. Mike McClone, commodity strategist, Creedy Gupta, our Markets Live reporter at Bloomberg News. Let's do the bite of the day.
It's one number that tells us a lot. It's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
All right, today's number, it is $500 million. Jeff Bezos bought a super yacht. I read this morning. That will probably cost upward of $500 million, $500 million to build. Project Y721 is a 127-meter vessel with 3 masts, its own support craft, and a helipad. That means it has a separate boat that has the helipad on it. That would make it one of the largest sailing yachts ever built in the Netherlands. Steven Spielberg also has a yacht on order. People in the know say, I have a boat, but it's really small in comparison.
Yeah.
Mine would be the support craft, maybe. Luckily.
That sounds like he's going to have a fun summer.
All right, let's get a check on world and national news. Over to Karen Chase we go. Hi, Karen.
Hi, Carol. President Biden is rounding up a global posse to chase down the cyber hackers who attacked the nation's biggest fuel pipeline, disrupting distribution from New York to Atlanta. The president is working with other nations to help bring them to justice, and he's working with the owners of the pipeline.
The Department of Energy is working directly with Colonial to get the pipelines back online and operating at full capacity as quickly and safely as possible.
As the disruption drags into day 3, Colonial officials are vowing to recover from the hack within days. Analysts say the amount of damage done will depend on the length of the outage. Administration officials are confirming that they're investigating it as a hack attack. The suspected culprit is a Russian group called DarkSide. The hack is expected to raise gas prices up to 5 cents a gallon in the short term and possibly cause critical shortages in the long term. Business isn't quite booming yet, but the office is buzzing again. The nation's offices are slowly reopening as the vaccination rates rise. The percentage of workers returning to their desks rose to just over 27% last week. Get ready for a post-pandemic resignation boom, according to a Texas A&M associate professor of management who has studied exits of hundreds of workers. He says when there's uncertainty, people stay put. So there are plenty of pent-up resignations that just didn't happen over the past year because of the pandemic. They'll be coming soon. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karen Chase, and this is Bloomberg.
All right, Karen, thank you so much. You're listening to Bloomberg Business Week, kind of off and running thanks to the president. A little press conference at the top here. A lot going on this Monday. And one of the things we're looking at is I can certainly see it in our office. I can see it in New York City, people coming back in a big way. And I've been talking to people who are back on the subways and saying it's okay. But yet it seems like crime maybe has become a little bit more.
The subways is making too many residents hesitant to return to mass transit and preventing the city's comeback from the pandemic. That's at least according to Brooklyn Borough President and mayoral hopeful Eric Adams. He said it on Monday. He called on Mayor Bill de Blasio and other public officials to increase police on the subway stations ahead of the May 17th resumption of 24-hour service. Remember, service hasn't been 24 hours for the better part of the pandemic as a result of what has happened with the MTA and with the subways over the last year.
Right, exactly. And so they're looking to increase things like transit police ahead of that May 17th resumption of 24-hour service. So that's just, a few weeks away here. It's just around the corner. But, I mean, you go through, there's just in this story by our Skylar Woodhouse, it talks about on Saturday, 3 people were shot in the middle of Times Square in broad daylight, including a young child. And so, I think there are some worries about as increased activity and people come back to the streets, whether or not there's the police support to protect everybody. And certainly on the subways where we know once you go underground, it can be a little bit of a different world.
Yeah, but the thing about New York City is that for as long as I've lived here, 24/7, the subways are being used. And there are people down there. And there is this feeling of safety when other people are around you. The problem is when people are not around. And that's right. So one of the cures for this is actually people riding the subway more, as like kind of counterintuitive as it sounds.
Right, exactly. And we'll see if that comes back. I mean, like just from talking in the newsroom, I'm feeling like there are a lot more people who are back on the subway. But you're right. Just by having more people around, I think about it too. Or I think about pre-pandemic, even with my daughter, I'd be like, okay, you can go at this time because I know that there's going to be a ton of people commuting. And then it gets a little bit quieter.
I'm going to start riding the subway next week.
All right. Me too, I think. You're listening to Bloomberg Business Week. This is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
Let's begin in the energy complex. So looking at the active futures contract for gasoline now, trading lower by just 0.1%, but this contract had been up by more than 4% overnight after a cyber attack forced the closure of a key U.S. fuel pipeline. And now we know that America's biggest petroleum pipeline is planning to restore deliveries by the end of the week. This is operated by Colonial Pipeline. The company told the White House its system has not suffered any damage and can be brought back online quickly. Generally speaking, in markets today, the debate continues as to whether or not higher inflation will derail a rebound in growth. Higher inflation is a particular threat to information tech firms, given their longer view on revenue. And this shows up right now in the NASDAQ Composite, which is down by more than 2%. Want to point out that shares in both Alphabet and Facebook are trading lower today after being cut to neutral from buy at Citi. The firm sees strength in internet ads as being very robust over the past 2 quarters. However, Citi also says that growth is likely to decelerate. This would provide for a very difficult year-over-year comp. Historically, that is not a bullish indicator, to be fair. NASDAQ Composite, as I mentioned, down more than 2%, although the Dow Industrial Average is near a record high. Intraday, we were above 35 grand for the first time. Right now, we're at 34,920 with a gain of about 0.4%. In the broader market, S&P 500 down 0.5%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. So has China reached a tipping point that could endanger its growth, social stability, and place in the world? In his weekly column, Bloomberg New Economy editorial director Andy Brown writes about China's Achilles heel. And you should also note that you can sign up for the New Economy daily newsletter at bloomberg.com/new-economy. I've signed up for it, and I'm getting it every day. Andy joins us in our interactive broker studio. It's so nice to have you in studio.
It's great to be here, Carol, and thanks for signing up for the newsletter.
You're welcome. Everybody else should, because I always feel like, and I've said this to you before, that you often bring to the table something that ultimately in a month from now or 2 months, everybody's talking about, especially when it comes to China. You have insight like no one else, and this story plays to it. Talk to us a little bit about your column.
So this really is the big one. This is the big tipping point we've been talking about for years. In demographic terms, we've hit peak China. The population is not growing. It's all downhill from now on in, and actually we're going to get the census results, the latest census results this week, and it's quite possible that those data will show that China's population has already started to shrink.
Which is staggering, Tim.
Okay, so make the connection between the population loss there and what it means for the country's future.
So probably just a recap. You had in China a massive population boom in the 60s and 70s, right? This was Chairman Mao basically said to Chinese women, it's your patriotic duty to have babies. So in the 60s, Chinese women had on average 6 babies. You then get this doubling of the Chinese population in 30 years to 1 billion, and they freak out, the party freaks out and puts in place the most draconian family planning policy in history. One-child family, right? Both of those policies are now coming home to roost with disastrous consequences. So the boomers, the Mao boomers, are retiring en masse. Meanwhile, the working population is shrinking rapidly. And so you project forward, whereas today you have 8 workers for every 1 retiree. 2050, you're going to have 2 workers for every retiree. Who is going to look after the old people? So it's not so much that the population is shrinking, but that the age composition is changing radically.
Well, we talked about that in regards to Japan years ago, right? And the impact it had. We talk about it on the U.S. society. I mean, so can't Chinese officials just say, okay, everybody, go ahead and just more babies now?
Well, you talk about Japan, it doesn't work.
Yeah.
I mean, once your population starts shrinking, it's really all over. I mean, you have a situation now in Japan, they try to, of course, encourage couples to have children, doesn't work. Right now, something like 1 in 4 Japanese women in their 30s are single. They don't want babies at all. Mm-hmm. They don't want marriage at all. They want a life outside of the family. And that's true in Singapore, it's true in South Korea, it's true in Hong Kong. You know, the reversing a demographic trend is virtually impossible.
A question that you ask in the column is, can technology offset population loss? Can it?
Well, it can to an extent, right? So people say that it's not about the raw numbers now. National power is measured more in terms of technological capability, and that's true. People say, well, why should you worry about, shrinking workforce? You just deploy robots instead of people. But that kind of can mitigate. I mean, it can offset population imbalances. But, you look at the problems this creates. Who's going to, what about the medical system in China? Now, of course, with retirees, you have
Okay, guys, we have to place stop on profit for euro. The price I'm looking to place 55. Okay, stop on profit place. So whatever happened, you will not close this trade with loss. Yeah, you will end up in profit if it will change its direction. Otherwise, we will see if it will move lower. We will place stop on profit even in our advantage higher, right? Good, guys. Well done. I'll speak to you later.
Save, right? So your national savings rate go down, and so the pools of capital available for investment start to dwindle. That's one immediate impact. But then you also have an impact on entrepreneurship and innovation. I think that's Young huge, right? Societies are innovative, right? And then in raw terms, China's vast population, they have more engineers, they have more, they have more scientists, and that population starts shrinking with impact on human capital.
Andy, just very briefly here in 30 seconds, is this something we need to worry about happening in the U.S.? The years-long U.S. baby drought worsened last year. Births dropped 4% from 2019 to the lowest level since 1979. 20 seconds.
Okay, big difference, immigration. If the U.S. wanted, it could open the border. China doesn't do immigration.
It also sounds like this is...
Yet. And it probably won't for very complicated ethnic reasons, reasons of social cohesion. They just don't open their border. Minuscule numbers of Chinese people are immigrants. Or people in China are immigrants.
And this isn't a problem that China can just throw money at, correct? Just quickly.
Absolutely not at all. In fact, this isn't a problem they can address at all.
Told you, it's a must read, always is. Andy Brown, thank you so much. Andy Brown, editorial director at Bloomberg New Economy. And of course, check out, as I said, the New Economy daily newsletter at bloomberg.com/new-economy. You're listening to Bloomberg Business Week. Carol Massar, Tim Stanovic. We're going to talk about that cybersecurity hack in just a moment. This is Bloomberg.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So I think it caught all of our attention over the weekend, right?
Yeah.
About this cyber security attack bringing down a major pipeline in the United States, energy pipeline.
Yeah, it's the pipeline that gets gas, refined petroleum to the United States East Coast. It is a very important piece of infrastructure.
Yeah, exactly. And it's just a reminder that our infrastructure can be vulnerable. It is vulnerable. So we're going to talk about that with someone who has worked with various aspects of our government about cybersecurity issues. First up, though, let's get back to your top business stories. Another check on the trading day. Here is Doug Krisner.
Hey, Carol, that pipeline is operated by Colonial Pipeline, and today the company told the White House the system has not suffered any damage as a result of that ransomware attack, and it can be brought back quickly. This has knocked the price of gasoline around a little bit today. Overnight, when the cyber attack forced the closure of that pipeline, gasoline had rallied by as much as 4%. Right now, the gain is only about 0.2% in the active gasoline contract. We have a lot of weakness in technology stocks today as the market debates whether rising inflation will derail growth. You know, rising inflation would be a particular threat to information technology firms. They tend to take a much longer view when it comes to revenue. So we have the NASDAQ Composite today down by about 2.3%. Also want to touch on Alphabet and Facebook. These shares both today cut to neutral from buy over at Citi. The firm says strength in the internet ad market was very robust in the past 2 quarters. However, Citi says that growth is likely to decelerate given a difficult year-over-year comparison scenario. Right now, we do have the Dow Industrial Average off the best level of the day, but we are higher by 0.3%. Earlier, we were at an all-time high, 35,091, but again, off the best level of the session. In the broader market, we've got the S&P 500 down about 0.6%, and a little move up in yield terms. 10-year Treasury right now up nearly 2 basis points. We've got a yield at 1.59%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. So, as we mentioned, big story from the weekend. We're still dealing with it. That cyber attack that crippled North America's biggest petroleum pipeline. We're talking about the Colonial Pipeline. Doug talking about the stock impact. It's a critical source of supply for the New York region. The FBI, Tim, already attributing the massive breach to ransomware created by a relatively new gang. It's called DarkSide.
Yeah, let's go right now to Andre Krell, founder and chief executive officer of LifeVars. The New York City lab was established in collaboration with the FBI, DHS, and Secret Service to examine digital evidence of all forms of cybercrime. Andre joins us right now on the phone from New York City. Andre, thanks so much for joining us on this. When you see something like this happen, what is your first thought?
Tim and Carol, thank you really for having me. My first thought is, look, we handle these 300 incidents like this every year. So cyber patients coming to my door on a daily basis. I feel like a cyber emergency doctor and a therapy. So for me, that's a normal day, right, to have like 10, 16 victims calling and asking for help. What difference maybe right now is the press around and magnificence of the Colonial. It's like a 45%, I guess, or East Coast supply. And also give the understanding that even such a big entity can be compromised, and the industrial control system, what they call industrial control system, the pipeline, can be affected.
Do you think the Colonial Pipeline is making a mistake by not asking for cyber support from the U.S. federal government? Is that a mistake, or is it better for Colonial to remediate on its own?
Carol, I do think they do. They're part of, there's something called Industrial Control Systems Joint Working Group that's established at the DHS level. I do believe that they are part of this working joint group, and DHS holds, at the John Felker era, who was Assistant Director of Agency, which we had a personal relationship with, they hold many of these exercises with these systems. You have to think of these straight after like a cyber sniper. It's not like someone is making mistakes, like, whose mistake is that some of us gets calls tomorrow? Like, should we brace someone for bringing the call to society or any kind of like a virus to society? I don't think there's really like a point of finger to say who is really guilty. Look, these threat actors who are making 30, 40 million a year, they have some level of sophistication. For example, there's a speculation in the market right now that Colonial was targeted because of high ability to pay through their insurance program. Understanding is that, such threat actor looking for 30 to 40 million. Apparently, Colonial holds such money to pay on some insurance program. So I'm not sure if that's true or not, but there's a speculation that threat actor should pick them because they are able to pay.
What needs to happen to get to a point where this just doesn't happen anymore, where this can be prevented?
It's look like let's face the reality. Being a compromised, like for me, I tell you, being a cyber doctor, it's just one of the life certainties, right? There is no way to prevent cyber sickness per se, in my opinion. Like we all gonna get something, right? And the question is, it's gonna be mild call to big cyber cancer, and is there something we can't answer? But what we can answer to prepare for it, like take all the vitamins, do like more holistic approach in cybersecurity, do more holistic approach in how we try to detect, remediate these threat actors, how we actually detect them, and how quickly can we really deal with them when we detect them and isolate those systems that have been compromised. Most of the networks, for example, what happened to Colonial, is these threat actors gonna come to your network. It's just a reality. Now, real question is, can you isolate them very quickly? Can you eradicate the threat? Can you disconnect and prevent a lot of movement from more damage? And we've seen in society in a pandemic how we failed. Why do you think the enterprise systems don't fail? They fail the same way that the whole society fell to pandemic. It's just the nature. We as I would say, computer architects never had to deal with this isolation like a zero trust issue. Like, how do we really operate? Like, when I can't trust you that you Carol and Tim on the phone, I never met you. How do I know it's really you? And how do I know it's really Bloomberg Radio? What if this is radio going to somewhere else?
Andre, just got about 50 seconds left here. So you say you get calls every day. So is this just kind of part of our norm going forward?
Carol, for me, it's been for the last 15 years. So
yeah,
I can tell I've been running the cyber emergency room. This is a business what we do as a lifers. This is the digital forensic incident response. We also have an offensive team that's basically breaking this for clients being paid. And we do this like every day. This is what we're actually living in.
So is it about, just quickly, we've only got about 30, 40 seconds, is it about doing harm, or is it just about finding entities that can pay the ransom money? And just quickly, if you could.
It's truly just getting paid. It's criminals just want to get paid. That's all what they want. And it's easy. In 2, 3 days, 4 days, holding ransom, get paid in the Bitcoins, disappear. And thanks to momentum, what happened with the Bitcoin going up, some of them acknowledge Mr. Tesla and congratulate him for Bitcoin going up.
Well, good to check in with you. I'm sure you're busy, as you mentioned at the top. So, Andre, thank you for your time again. Andre Krell, he's founder and CEO of the cybersecurity solutions and services company LifeOurs. He has done a lot of contract work for the Department of Justice and the Special Cyber Operations at the U.S. Air Force, joining us on the phone in New York City. But a way of life?
Is the organization that has been connected to this pointed out in a statement on the dark web earlier, they don't want to necessarily cause harm. They're business people.
Right. It's a transaction.
But it's hard to do this without causing harm.
Yeah, exactly. Because this pipeline has been down.
Exactly.
All right, you're listening to Bloomberg Business Week. Let's get another check on world and national news. For that, it's over to Karen Chase. Hey, Karen.
Hey, Carol. A cyber attack on the nation's biggest fuel pipeline system halted its operations from Atlanta to New York. Bloomberg's Irv Chapman reports from Washington.
The president said he takes the ransomware attack very seriously. My administration will be pursuing a global effort of ransomware attacks by transnational criminals who often use global money laundering networks to carry them out. The president was asked if Russia had any responsibility. So far, there is no evidence from our intelligence people that Russia is involved, although there is evidence that the actors' ransomware is in Russia. They have some responsibility to deal with this. The president also spoke on the improving economy and reminded workers of the law that says if they refuse a suitable job offer, they lose unemployment benefits. In Washington, Irv Chapman, Bloomberg Radio.
People are really eating good in the neighborhood. As vaccines ramp up, Applebee's is launching a hiring binge to take care of its growing number of customers. The chain is hiring 10,000 new workers on its National Hiring Day 1 week from today. Other restaurants are still doing better, but not good. Restaurant dining is down 27% from 2019, according to OpenTable. Seated diners are 92% of the crowd. Credit card companies are bringing back huge points offers, such as a 125,000-point sign-up bonus and even credits for personal training. Capital One is offering access to its very first airport lounges. Banks had pulled back after the pandemic, fearful they'd have to eat a whole bunch of losses. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karen Chase, and this is Bloomberg.
All right, Karen, thank you so much. Carol Massar, Tim Stanovic here in our Interactive Broker studio. So introvert, extrovert.
Okay, traders, I'm going to move my stop on profit even to better in our advantage price. The price I'm going to put 121.52. So if you started following my trade and if you decided to sell short euro, please don't be a hero. Don't try to sell right now, or don't try to keep over there. Enjoy your profit, because whatever happened, you will have 5 pips in profit. In our case, 1 pip equals 100 pounds. So 5 pips, it will give us 500 pounds. In your case, it's all about how much you decided to trade and how much money you wanted to use, you decided to use by placing a trade on euro. Okay, guys, stay safe.
Lockdown. Andreas wonders if that's in part because many introverts can't actually withdraw into solitude when they're stuck with suitemates or family members. I don't know. I mean, I think we're still at the point, Carol, where we're discovering how people fared. And like, it's interesting to be talking about this when I think we are in a position where we're opening back up. But one part of the conversation that has been happening lately is like, hey, I forgot how to talk to my colleagues at work.
Did you not see the SNL skit over the weekend?
I did see that one.
The cocktail party? It's
that one I felt seen, as they say. Even by Elon Musk. It was really funny. That was actually, the digital stuff is the best. But that's neither here nor there. But it's like, look, you and I, without actually, like, we were talking to a colleague who said, hey, recently, who hasn't been back in the office much, and he said, hey, it is awkward. Like, we're not on video chat right now. We're doing this in person.
Right, exactly. I haven't seen you in a year.
Yeah.
Like, it's like kind of finding your way again. And I don't know whether the studies are going to come up with any one overarching conclusion.
Yeah, that research is still happening.
Yeah, exactly. But anyway, check out that SNL skit, The Cocktail Party. It's funny.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We've got mixed trading in the U.S. equity market right now. The Dow Industrial Average is extending a record on a closing basis, but intraday we are well off the best level of the session. The Dow right now, 34,873 with a gain of about 0.3%. I believe the session high was about 35,091, so that is the intraday record. If you look at what's happening in the broader market, the S&P 500 is down about 0.7%. A lot of technology weakness today. The S&P 500 Information Tech Group is down about 2.3%. Markets continue to debate whether rising inflation is going to derail global growth, and we know that rising inflation is a particular threat to information technology companies. They tend to have a much longer view on the revenue side. NASDAQ Composite is down about 2.3% right now. If you look at what's happening in the bond market, yields are actually moving higher. The 10-year Treasury now up by more than 2.5 basis points. We're at 1.60%. Keeping a very close eye on gasoline futures. Here we are in the extended session. The active contract right now higher by 0.2%. Earlier, this contract was up more than 4% after that cyber attack forced the closure of a key U.S. pipeline. It's operated by Colonial Pipeline, and the company today telling the White House its system has not suffered any damage as a result of that ransomware attack, and things can be brought back quickly. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. So we talked about this story actually last week. It's in the current issue of Bloomberg Business Week magazine. It was a most read story in the Bloomberg when it crossed about, yes, women, Tim, are getting top jobs at fund houses, but just not the ones that manage money.
Yeah, and it's a little surprising because there have been so many initiatives over the past 20 years to try to actually increase diversity. Joel Weber is editor at Bloomberg Business Week. He joins us from the New York City Bureau. Liz McCormick is bond and FX reporter at Bloomberg News. So, Joel, it's surprising because despite years of initiatives, the statistics have not budged. What's going on?
Yeah, and that's sort of what led us to want to kind of dig into it. And so when Liz and Katie, her co-writer on this, mentioned that it was a story that they were interested in, we sort of said, see what's going on there. And what is interesting is that there are some top jobs with some interesting developments and some hires there, but the rank and file, we're still not really seeing much action there despite a lot of push for it. So Liz, what do you attribute that to?
Well, it's interesting. Like Joel said, it's like in the middle is where, you know, we're hearing there's more women, because to run a fund, there's the fund managers, and then there's lots of strategists and analysts that help. And what it seems to be from our reporting and some of the data from Morningstar is that, you know, there are more women coming in and taking the roles of strategists and helping the fund managers, but there doesn't seem to be that many that are moving from that level to the next level. And there's a mix of reasons we can talk about why people think that is. And to be honest, Morningstar said they want to kind of dig deeper in the data to kind of see what's coming up the wheels. Where is it not working to get them to the next level?
Yeah, it's a head scratcher because you do see, as Tim mentioned, a lot of companies and initiatives to increase women, certainly at financial firms, and it doesn't look like the numbers are moving as you reported. Tell me about the one woman that you profiled in your story. You talked to a few, but you start off with Linda Zhang.
Yeah, she was quite compelling and interesting. And it's, you know, she started her own firm. She's been at several big asset managers, started her own firm. And, you know, she didn't, you know, mince her words and said, I think there's still some biases in there that, you know, men feel comfortable letting, you know, women, you know, kind of assist and give some advice. But, you know, for the firms to let them kind of run the fund themselves, she believes there's still some bias against that. But we're seeing, like I said, with her, you know, she went on, you know, to start her own firm. And I, you know, was very happy to talk to Jean Hines, who's going to be the new CEO of Wellington. And I will say Jean is hopeful. You know, she's realistic, but she's hopeful. And she said, you know, 15 years ago, she was the only woman in the room all the time. And now that's changing, and she's hoping that maybe eventually, like it's just a slow-moving thing, right? That maybe since we're seeing all these initiatives and some more women research analysts that maybe the numbers give us 5 years, whatever, we're going to see more women fund managers. We can hope, so it's nice to have hope, but it's a little distressing to see the numbers.
Well, Liz, another woman you profile is ARK Investment Management's Kathy Wood, who also started her own firm, started her own fund.
Right. So it's interesting. It's like I have 2 young daughters in their 20s, both working, and they're not each in finance, but I like to show them these things to say, like, listen, there's a way, and some of these really sharp women, I guess, have said, like, listen, if the system isn't going to move me, I'm going to create my own, create my own firm, do my own niche, and I think that's important. There's a way to do it. I remember I did a story a while ago which was saying that women running fixed income funds, or those funds that had women on it, Morningstar data showed the returns were better than just like pure male-run funds alone, not mixed gender. And some women were saying, kind of, it's crazy. It should just go by the numbers. So I think these women are saying, listen, I'm confident myself. I'm doing well. My returns are good. I'm just going to start my own biz. So I think it's great to see.
At the same time, there's the Gene Hines story is ultimately one of somebody who's persevered within a company for a long time. And like you mentioned, Liz, she's going to be CEO on July 1st. So her route, I suppose, is sort of the one that a lot of companies and other executives are hoping to emulate, where you can sort of rise through the ranks and eventually take over a fund and then become a CEO of a fund of funds, right? So what does she talk about in her experience, since that's a pretty high profile position that she'll be inheriting here soon?
Yeah, she was really interesting, and she was saying not to minimize her talents, but she said, listen, I rose to these ranks, and she had a lot of good things to say about Wellington and what they've done, and she had a great mentor in Ed Owens that really helped. But she said, in some ways, I rose to these ranks not because the system facilitated it, just because it worked out. I had a good firm, a good mentor, she's smart, et cetera, but it wasn't designed that way. And she was saying, so we need the systems to be designed, whether it's, and a lot of these women talk about role models, like people, you hear this about kids with doing different things, but same thing for any job. Young women need to see women doing it, and say, oh, hey, I can be that, like someone like Jean to say, wow, I could be a CEO, or I could run a fund, or, so I think they all feel like we still need more women role models. And a lot of firms are working on that, but it's, the more women make
Liz.
it, right? Success breeds success.
What's amazing to me is that you would think that performance alone would just be like, well, wait a minute, if Morningstar has done the research and shows that women running fixed income, the performance is there better than their male counterparts, you would think that would be a no-brainer, and it kind of boggles the mind here, Liz.
Yep. And it's funny, like, one thing, and I have heard this in other years as I've kind of followed this topic for a while. Maybe I'm biased because I'm interested in it, but I think it's important to shine a light on it. But that, Tracy Chen, who's at Brandywine, who spoke to us, she said, like, I've heard before, like, also young women who, we know there's a lot of initiatives. I have one daughter who's an engineer to get more women into STEM, but she was saying, but fund management, you don't have to be this super quant. And she thinks sometimes that keeps women away. She said, and it's true, like knowing history and geopolitics and all that is so important in making decisions on which stocks, which bonds. And so maybe we would just need to give that message to young women that, you could come from a wealth of different backgrounds as far as academic studies and come into this.
It's a great story. And in the current issue of Bloomberg Businessweek magazine, Liz, thank you so much. Liz McCormick, she's bond and FX reporter at Bloomberg News, along with Joel Weber, editor of Bloomberg Businessweek. He is in our New York City bureau. Liz on the phone from New Jersey. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Tim and I in Bloomberg Businessweek, we're going to continue. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. This is Bloomberg Radio.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
3 p.m. on Wall Street. We have an hour remaining in today's session, and in a word, a little defensive with the NASDAQ composite right now down about 2.3%, near our session lows. Generally speaking, markets are continuing to debate whether rising inflation is going to derail a rebound that we've been seeing in growth, and not surprisingly, rising inflation is a particular threat to information technology firms, given their longer-term view on revenue. Earlier in the day, Dallas Fed Bank President Rob Kaplan was kind of softening his language on adjusting monetary policy. Kaplan told us substantial further progress is needed before starting the conversation on tapering asset purchases.
I voted for that in December. I've supported it consistently. We need to get to substantial further progress before we can start to taper. And we'll have a debate, of course, around the table about what constitutes that fine.
Now, last week, Kaplan did argue for beginning a conversation about the Fed taking its foot off the gas in support of the economy. If you look at what's happening in the bond market right now, the 10-year Treasury is up nearly 3 basis points in yield, 1.60%. Semiconductor shares being hard hit today. The Philadelphia Semiconductors Index is down 4.4%. And as long as we're talking about chips, we have Commerce Secretary Gina Raimondo saying that she is planning a summit with companies impacted by the global chip shortage. This would include large chip manufacturers as well as the U.S. automakers. And today, weakness in shares of both Alphabet and Facebook. They were both cut to neutral from buy at Citi. The firm says that strength in internet ads was very robust in the past 2 quarters, but growth is likely to decelerate given year-over-year difficulties with making those comparisons. Right now, Dow Industrial Average with a gain of 0.3%, but in the broader market, the S&P 500 is down 0.7%. NASDAQ comp off more than 2.3%. That's your Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right. Well, thank you very much. Bloomberg Business Week is brought to you by SEI. Since its founding 50 years ago, SEI has provided investment managers and asset owners with robust infrastructure platforms and flexible outsourcing solutions. Go to SEIC.com/IMS.
All right. So, Tim, one of our top stories, certainly on this Monday, kind of is every day, and that is the latest on the virus in COVID-19. And we are seeing vaccinations being given out, slowing down. We've talked about that a lot here in the United States. And there were some comments by Dr. Anthony Fauci noting that COVID caused more deaths in the United States than reported. He caught up on Meet the Press over the weekend. Check it out.
We've been saying, and the CDC has been saying all along, that it is very likely that we're undercounting. You know, the model says that it's a significant amount, as you mentioned correctly, 900,000. That's a bit more than I would have thought the undercounting was. But, you know, sometimes the models are right on line. Sometimes they're a bit off. But I think there's no doubt, Chuck, that we are and have been undercounting.
All right, so undercounting. Let's see what our next guest has to say about that and kind of where we are when it comes to COVID-19. Bruce Farber is back with us. He is Chief of Infectious Diseases at Northwell Health's North Shore University Hospital and Long Island Jewish Medical Center. He's with us once again on the phone from Manhasset, New York. Dr. Farber, nice to have you here with Tim and me. How are you?
Well, thanks for having me.
Well, good to hear that. Tell us about your thoughts when you heard Dr. Anthony Fauci over the weekend. What do we need to kind of understand and the significance of his comments?
Well, I don't think there's any doubt that we've significantly undercounted. That has always been in play. You will recall last year when there was peaks, many people died at home, never made it to a hospital. They never counted as COVID cases. Other people didn't count as COVID cases when they were not diagnosed because we didn't have enough tests. There's no doubt in India that there's a dramatic undercount of people who are not making it into hospitals and being tested. I think we've always known that that's true.
So does it change? I mean, since it's something that you've known, I mean, it's not necessarily something that I've followed closely, but as a medical professional, I mean, it sounds like that's something that has been something that's been realistic throughout this. And I'm wondering to what extent you think about this from the perspective of, okay, people putting off going to the doctor, and then people getting sick from something unrelated to COVID, but in the end it is related to COVID because they didn't actually go and visit a provider.
Yeah, absolutely. And in the beginning, even when people went, they couldn't. The diagnosis couldn't be made because we didn't have enough tests. I mean, that's obviously not the case now.
But I mean something unrelated to COVID, like if they were scared in those first few months to actually venture out.
Oh, if you count people who, if you will, died of COVID who never had COVID,
right?
Like
that's what I mean.
Malignancies and things.
Exactly.
Yeah, there was a huge group of people. That's much harder to count, but there's no question. Anecdotally, we saw many people who had advanced malignancies that had been put off for many months, heart attacks, pulmonary emboli, other medical problems that just were delayed because of fear of going anywhere. Yeah, no question.
But is this about getting it right for the history book so that we understand the significance of this pandemic going forward, and that might shape policy going forward, research going forward, the hunt for the next virus that might be problematic for our society?
Yeah, I think it's all of those things plus others. It's also relates to, how we consider this virus in terms of therapeutics, in terms of vaccinations, in terms of figuring rates of how vaccinations are going to prevent people, in terms of understanding what variants would do to a population, depending upon whether our counts were right or wrong. So, yeah, it's important to get all those things right. This data drives our policies, or at least should drive our policies.
Well, speaking of data, Dr. Farber, I'm looking at the latest data from New York City. The percent positive of people who've tested positive, decreasing. Confirmed cases, decreasing. Total cases, decreasing. Hospitalizations, decreasing. Confirmed deaths, decreasing. How are you guys doing at Northwell Health? I mean, that all sounds great.
We're doing exactly what you said. Our numbers are dramatically down. Every week they're down. Deaths are down. Hospitalizations are down. New admissions with COVID are down. They mirror exactly what you said, and those rates have significantly fallen week after week, not just linearly, but even more and more. I mean, our numbers are so much lower. I think North Shore Hospital has roughly 40 or 50 COVID patients in it now. It was probably 120, 130 less than 2.5 weeks ago.
What are those cases like? What are the demographics on it?
The demographics are, we used to think that we would see a younger group of people. We have predominantly seen, at least particularly in the very sick people, the same group, the elderly people with comorbidities who never got vaccinated. That's what's common to the people who are in our ICUs. None of them have been vaccinated. And that's, to be honest, to me, the most troubling and depressing statistic of them all.
You know what? That's not something that's not a way that we hear this communicated, right? We don't hear. It makes me think of the way that I was taught about smoking when I was a child, and the way that the imagery associated with that, and we don't necessarily hear public health experts talking about vaccination in the context of life or death.
Yeah, I don't think that there's any doubt that no matter what you think of these vaccines, they are preventing hospitalizations and deaths. And although they're not perfect, and although they're not 100% effective, there's no question that you see very few people who have been vaccinated in the hospital. I've seen only a handful, but I've never seen any in the ICU, and I've never seen any die. I'm not saying that couldn't happen, particularly in an immunosuppressed individual, but from a practical point of view, they're so good at preventing that.
Dr. Farber, sit tight. We're going to do a little bit of news, and then we'll come back and continue the conversation. But that is certainly something we have not heard a lot, Tim.
Yeah, and I think it's really important if we think about it in the context of what the Biden administration wants to do with 70% of U.S. adults getting at least one shot by July 4th. Now the people who have been hesitant to do that are the ones who need to be receiving that message.
Right, and who are, as we just heard from the doctor, those are the ones that are ending up in the hospital with COVID. We're going to come back to Bruce Farber, Chief of Infectious Diseases at Northwell Health's North Shore University Hospital and Long Island Jewish Medical Center. They have been front and center when it comes to the virus and then also rolling out the vaccine here in the United States. All right, you're listening to Bloomberg.
Well, let's get down to Karen Chase in the Bloomberg 1130 newsroom for a check of world and national news.
This is Bloomberg Radio. The cyber attack on a major fuel pipeline is being closely watched. Fuel suppliers are growing increasingly nervous about the possibility of gas and diesel shortages, and perhaps if it drags on too long, shortages in jet fuel. Energy Secretary Jennifer Granholm says it spotlights America's infrastructure vulnerability.
This issue of cyber attacks on our critical infrastructure, especially energy infrastructure, is not going away. This is a serious example of what we're seeing across the board in many places, and it tells you that we need to invest in our systems.
Colonial Pipeline is still developing a plan for restarting that pipeline. Facebook is getting pushback on its push to create an Instagram for kids. Bloomberg's Amy Morris has the details.
Facebook has already said it doesn't care what the critics say. It's moving forward with Instagram Youth. But now 44 attorneys general sent a letter to Mark Zuckerberg asking him to abandon the plans to create a version of Instagram for children under 13 years old. The letter, signed by attorneys general from red and blue states across the country, urges the company to abandon the plans, saying, quote, Facebook has historically failed to protect the welfare of children on its platforms. In Washington, I'm Amy Morris, Bloomberg Radio.
Banks are dangling big bonuses to keep junior associates from defecting to other banks. UBS is paying a one-time $40,000 bonus to its global banking analysts when they're promoted, as they struggle to reward and keep younger employees. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karen Chase, and this is Bloomberg.
All right, Karen, thank you so much. You're listening to Bloomberg Business Week on this Monday. Tim Stanovic, Carol Massar here in our Interactive Broker studio. This is the third most read story on the Bloomberg in the past 8 hours, and I gave our producer, our YouTube producer, Ari, a little bit of a tough time. I'm like, we did this story already, but it's not a good situation, which is why it's still trending high.
Yeah, some new data. This is about the Seychelles. It's the world's most vaccinated nation. The country has fully vaccinated 62.2% of its population, but active cases of COVID have more than doubled in the week to May 7th.
Yeah, they came out in a statement today, and they said that 2,486 people currently have COVID-19, and 37% of those have received 2 vaccine doses. The number of active cases rose from 1,068 a week earlier, and they did not, though, disclose how ill those who had contracted the disease were. But what's interesting is, I mean, this is kind of this great little experiment, right? Microcosm of people who have gotten the vaccine, and yet we're seeing COVID.
Well, one important thing to point out is the shots that are given in the Seychelles have been Sinopharm. Those were issued to 57% of those who've been fully inoculated, and the rest with Covishield. It's a vaccine made in India under a license from AstraZeneca.
Right. And listen, we've talked about vaccine nationalism. We've talked about, you know, we kind of laugh about here. We saw it on SNL. It's like, which vaccine did you get? Like everybody asks. But we saw the stories that were certainly on the Bloomberg that talked specifically that in terms of maybe travel, people might be permitted or not permitted based on the vaccine they get.
One very important point from this story is that as of May 8th, no one who had contracted COVID while being vaccinated had died. That's according to the Seychelles news agency, which cited the Minister for Foreign Affairs and for Tourism.
Yeah, so it's just something we're watching, and I think trying to understand the different products that are out there, the different vaccines that are out there. Listen, we went through this, no playbook from day one, but even with treatments that we thought worked or people said they worked and then they didn't, like we're kind of learning our way through this.
Look, it's important because reopenings are tied to vaccinations, and it seems like now that infections are tied to type of vaccine.
And people need to feel confident about the vaccines that they're getting. You're listening to Bloomberg Business Week. We're going to get back to Dr. Bruce Farber in just a moment. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
We're just under 43 minutes now until the closing bell. The equity market is mixed. The Dow is extending a record that was set in the Friday session, although we are well off the best level intraday. Let's get to the Bloomberg Macro Squawk Desk. Our friend Bill Maloney is there for a look at today's price action. Hey, Bill.
And good afternoon, Doug. U.S. stocks weak this afternoon after a positive start by the Dow and S&P. Like you said, the Dow is still up 97 points. S&P's dropped 28. NASDAQ is lower by 300. The U.S. 10-year yield hits 1.6%, gold up 5%, Bitcoin slumps 2%, and transports gain 45 points. Among the main 11 S&P sectors, leaders were utilities and consumer staples. Tech and telecom led to the downside, and leaders to the upside in the Dow, 3M and Procter & Gamble, while Visa and Intel were under pressure. After earnings, Trade Desk plunged as much as 27%. And in other news, Elliott is pushing Duke Energy to add directors to its board, and the Colonial Pipeline sees service mostly restored by the end of the week. Wrapping things up, Affirm Holdings and AECOM both report after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Doug?
All right, and the Macro Squawk Desk is where you can get live audio updates right on the Bloomberg terminal. The function is SQUA, then the green go key. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, Doug, thank you so much. Let's get back to our conversation, talking with Bruce Farber, who is Chief of Infectious Diseases at Northwell Health's North Shore University Hospital and Long Island Jewish Medical Center, still with us on the phone from Manhasset, New York. So we've covered a lot of ground, and I think it was significant what you had to say about the demographics of folks that are in your hospital coming down with COVID, that they are all people who didn't get vaccinated. So where do we go from here? What are your expectations about the rest of the year in terms of COVID? Because I think for a lot of us who've had the vaccine, we're increasingly feel like kind of the world is ours again.
Yes, I think most people should be optimistic. I think we're going to have a very good summer. Not only are rates down, not only are more people vaccinated, but we'll be outside. So I anticipate that our rates hopefully will go even below what they were last summer. Remember, last summer, even prior to vaccination, our rates fell dramatically. They're actually lower than they are right now in New York. And so I think we'll beat that and get better. And that's all good news. The bad news is, I mean, we still have 25% roughly hesitancy. And I think as a result of that, COVID will be in the background basically for a long, long time.
But one thing that I still have trouble understanding, Doctor, is natural immunity versus acquired immunity and versus vaccinations. So if the people who were eager to get vaccinated, and even those who weren't eager to get vaccinated, but everybody gets vaccinated who wants to get vaccinated, and then so many people who've gotten COVID have immunity from that, doesn't that give us an achievement of herd immunity to a certain extent?
To some extent, but unfortunately, natural-born immunity is certainly not permanent. I mean, it's certainly very secure for 3, 4, maybe a little longer months, but there's no question that you can get COVID over and over again. And regarding the vaccine, you know, I think we'd be naive if we thought that that vaccine is going to give you lifelong immunity. I'd be happy if it's 2 years at this point in time. I think we should plan on the fact that we will need boosters on a regular basis. Some people will need them more frequently than others, depending upon their age, their immune system, and their comorbidities.
How do we think about that at this point where we're still dealing with just, you know, the first round of getting everybody vaccinated, but for those who've gotten vaccinated, how do we need to be thinking about as individuals about the next booster shot? I guess I'm assuming we'll get some kind of guidance from the FDA or the CDC, and are we keeping the infrastructure in place to make sure that that happens?
Yeah, I don't think there's any doubt that our infrastructure and an extended one that will hopefully involve more community-based practices and eventually physicians' offices and more drugstores will need to be in place forever. I think we're naive if we think that we're going to reach herd immunity and COVID's going to go away and not come back. That's just not realistic. I don't think that'll ever happen for a wide variety of reasons, not the least of which is the hesitancy, not the least of which is the fact that there are variants. And, you know, the variants we have now, these vaccines are currently pretty good, not quite as good as as they are against non-variant or the ancestral strains, but they're pretty good. But that could change, and natural-born immunity is not going to be long-lasting, and certainly vaccine-induced immunity is most certainly not going to be lifelong. So when will it happen? Probably the beginning of next year. I think it'll vary.
Right.
We need better vaccine correlates, meaning tests to say whether you're still immune or not, and they really haven't been worked out, but I think those types of tests will be much more likely to be available in the next 6 months.
When you talk about immunity, and we've had some conversation, are you talking about the longer-term immunity would be T-cell immunity? Is that correct?
Yeah, it's both B-cell and T-cell immunity, and we have pretty good ways of measuring B-cell and very poor ways of looking at long-lasting T-cell immunity.
But that would be the holy grail, right?
Yes.
And not likely anytime soon?
Well, I mean, things happen a lot faster than sometimes I think. So I'm hopeful that by the end of the year, we'll have good vaccine correlates to know whether you're still immune or not.
So kind of building on Carol's question from earlier, what's just a realistic way for us to think about life? I always say on the other side of this pandemic, but it doesn't sound like we're going to get to the other side of this pandemic. And when we say we might live with this like the seasonal flu, you know, the seasonal flu doesn't shut us in homes, right? It doesn't prevent us from going to work typically, right? We live life. That's what normal is for us. Do we get to a point with COVID like that?
Yeah, I think essentially it's going to be very similar to that. Obviously, there's profound differences between flu and COVID. COVID is much more deadly, much more serious, and is not as seasonal. And so, but yeah, I do think we're going to get to normal. I think we're going to basically accept a background rate of morbidity and mortality with COVID that'll be much higher than it is every year with flu. But remember, there are anywhere from 25 to 65,000 people each year dying from flu. The overwhelming majority are elderly and have underlying medical problems, but infants can certainly die of flu. And I think, yeah, that's going to be in the background. And hopefully we can just, keep it at bay. And I mean, we're not going to go, the world's not going to be on lockdown forever. I don't think there's any doubt about that.
Right, but I get the feeling that the background rate statistic will be something that we will kind of have with us for a long time. Dr. Farber, thank you so much. Really appreciate it and appreciate catching up with you once again. Dr. Bruce Farber, Chief of Infectious Diseases at Northwell Health's North Shore University Hospital and Long Island Jewish Medical Center, on the phone from Manhasset, New York. We learned a lot there.
We did, and it's like everything in life, it's about adjusting expectations.
Right? Right.
Thinking about expectations, being realistic about those expectations.
Listen, I feel like humans are pretty flexible and can figure it out, and we do adapt.
We adapt when we're resilient.
Yeah, exactly. All right, coming up, we are going to check in on some of the big stories of the day.
We talk Doge a little bit?
We're going to talk Doge,
yeah, let's talk
a little
Doge.
Elon Musk.
Yeah, maybe some SNL references.
Exactly. Then we'll count you down to the bell because we've had a the Dow Jones Industrial Average at a record. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Do the hustle.
That's good.
I've been dying to do it.
So you
music,
didn't-
a little Saturday Night Live.
You didn't stay up and watch it.
I didn't.
I did, and I regret it.
Why?
Well, it was just so late, and yeah, there were some really funny parts. And
You're such an old man.
I am,
Not really.
you're right. I am such an old man.
Listen, I just Googled yesterday, so I'm an old woman because it's just, I went through. But
The way that I usually watch SNL on Twitter the next day.
he did talk about Dogecoin.
He did. He talked about it, and it didn't do what it was supposed to do, according to people who bought into it ahead of time.
Exactly. So we're going to get into it. Anders Mellon of Bloomberg, our wealth reporter, writing a story on it. In the meantime, let's get back to Doug Krisner with a check on that trading day. Did you watch SNL?
I did not, but Dogecoin was actually down at one point yesterday. I think
No.
35%. That was a big loss. I'm looking at Bitcoin slumping now. I mean, not that they're connected.
Well, no.
Well, I guess you could make a case that they are, right? We're off about 2.3% in Bitcoin right now at 56,585. But the focus here, with about 28 minutes until the closing bell, is squarely on technology shares. They are being pummeled today, particularly the chips. The Philadelphia Semiconductor Index right now is off by more than 4%. As the markets debate whether rising inflation will potentially derail growth, you have to take a very close look at some of these infotech firms, because they are negatively impacted by rising inflation since they have a longer view when it comes to revenue. The NASDAQ composite right now is weaker by 2.2%. That said, the Dow finished at a record high Friday. We are extending that now, not by much, only by about 0.3%, and we are well off the best level of the day. At one point today, the Dow traded above 35 grand for the first time. In the broader market, we have the S&P 500 down about 0.7%. And in the bond market, a move up, interestingly, in long-term interest rates. A 10-year Treasury last quoted at 1.60% in the New York session. And we're seeing a little bit of dollar weakness, other major currencies moving to the downside. And I'm speaking notably about, or principally about, the Japanese yen, which is at 108.80. I'm Doug Krisner. That is your Bloomberg Business Flash.
All right, Dougie, thank you so much. Well, he came, he was seen, he conquered, question mark. Elon Musk hosted SNL this past weekend with much anticipation by many about what he might say about Dogecoin. He didn't disappoint, really, on that front, sort of poking fun at himself, Tim, and also his crypto of choice. Of course, we're talking about Dogecoin. Listen up.
What is it, man? I keep telling you, it's a cryptocurrency you can trade for conventional money.
Oh, so it's a hustle.
Yeah, it's a hustle.
Why didn't you say that, man? Baseball to everybody.
It's a hustle. Well, maybe not. Anders Mellon is wealth reporter at Bloomberg News, and he joins us on the phone from our New York City bureau. Anders, okay. I don't even know where to begin, because at the end of the day, Dogecoin is a joke, or it was started as a joke. But there's now real money in it, and it turns out the folks who thought that Elon Musk was going to pump it up on SNL, they were kind of left a little disappointed, right?
Yeah, here was yet another strange twist to the winding tale that is American capitalism, as if we hadn't had enough of those in 2021 already. A ton of anticipation going into this weekend, obviously, and the price had been rallying, and then Saturday morning it all of a sudden started dropping, and it kept dropping throughout the afternoon, and it also dropped as the skit was going on, and then it didn't start rebounding until Sunday morning. It started rising again in the afternoon, and then it went down again in the evening. It's still down now, so it was quite the ride for all the Dogecoin holders this weekend.
Yeah, I mean, listen, we were all kind of on pins and needles to see how he would address it and how he would deal with it. I mean, at the same time came out a post, kind of post SNL, where he talked about his SpaceX is going to embark on a moon voyage in 2022 carrying a so-called CubeSat, and it's, I guess, from a company, Geometric Energy, that's been paid for entirely in Dogecoin.
Yes, which, I mean, just seems like a spectacular
PR move to make, and then obviously it drew a ton of attention, and it went viral on Twitter, and people like me are writing about it. Does this mean anything? I think Matt Levine summarized it pretty well in his column today, that, you know, companies decide to do something, they decide to transact money in Dogecoin because that draws attention. It did draw attention, so in that sense, a success. I'm not really sure that long-term it will mean anything, but we are talking about it now, so there we go.
Yeah, well, that's the question that I have is how long are we going to keep talking about this?
Well,
maybe since you're writing about it, it's a question you have too.
Yeah, I mean, the short answer is as long as, you know, people are willing to throw their money at it, we will probably keep talking about it. You know, as virtually all cryptocurrencies, it's just something that was created. It's not backed by anything. It doesn't throw off any cash. It's very similar to gold in that sense, but it actually only exists digitally. So the only fact that it's worth money is because there's somebody out there willing to pay a bit more for it than the person holding it. And as long as that continues, you know, the show goes on.
Is this what we're going to keep seeing over and over again? I mean, it started as a joke. And like you said, it's only has value because there's someone out there who's willing to pay more than somebody who's holding it. And it's not, you know, it actually, in cryptocurrency fanatics, like people who love Bitcoin, they're having a hard time with this because they say it actually gives a bad rap to cryptocurrencies.
Right. I mean, the big swings make it difficult to justify that this is actually a stable storage of value and a tool to carry out transactions. Perhaps what we might see is a sharp drop, and some people burn their fingers and perhaps decide that, you know, they're going to put their money into something safer and more stable, and with that we'll see less volatility. But I mean, that hasn't really proved to be the point yet. So
what's wild too is I think about the times that Elon has been kind of slapped on the hands for making comments on social media or something. But it's interesting, like what we are still trying to figure out what crypto is, and certainly what Dogecoin is. And so can he just go and make comments, and it's okay that regulators don't really know what to do with it? Anders, and just got about 30 seconds here.
Yeah, I mean, it's a tough question to answer, and it's something that I know the SEC is grappling with too. Obviously, it's you know, Matt Levine puts this very well too in his columns. You know, everything technically could be insider right. But also when it's something, you know, so vast like this, that involves so much money, then you also begs the question how much power just one person can have over it.
It's wild. It's just wild. Anyway, we are living, as you say, in unusual times. And even though things are a little bizarro, we are writing about it, many of us, and following it very closely. Anders Mellon, thank you so much. Always appreciate it. Bloomberg News wealth reporter here at Bloomberg News, on the phone in our New York City bureau.
Well, let's get to Karen Chase in the Bloomberg 1130 newsroom for a check of world and national news. Hey, Karen.
Hey, Tim. Global concerns are mounting as the disruption of a critical gas artery in the U.S. drones into a third day. President Biden says Russia has some responsibility to address the ransomware attack that crippled the Colonial Fuel pipeline, that he'll seek global cooperation to combat similar attacks. But he stopped short of blaming the Kremlin for the attack, saying there's evidence the hackers or the software they used are in Russia, and they have some responsibility to deal with this. The president also kept up his drumbeat of defense for his $1.9 trillion pandemic relief bill after Republicans blamed the weak April jobs gain on federal unemployment benefits. The owner of a Tesla killed in a fiery crash was behind the wheel when the car left his house. Police say it appeared that nobody was behind the wheel at the time of impact. The driver's body was found in the back seat, and another person was found in the passenger seat after a fire. Some suspect too many drivers are taking the autopilot name far too seriously. Ford is recalling more than 600,000 Explorer SUVs because roof rail covers might detach. The problem is with the retention pins. The recall covers 2016 through 2019 models. Dealers will install push pins and replace any clips and covers that have been lost. So far, there have been 11 reported cases of roof rail issues. Applebee's wants to welcome more people back to the neighborhood. It's staging a national hiring day a week from today with a goal of hiring 10,000 more workers. They're currently facing a crush of customers who are increasingly vaccinated and, of course, always hungry. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karen Chase, and this is Bloomberg.
Okay, this is our most read story on the Bloomberg in the past 8 hours.
Makes sense.
Yeah.
Absolutely. UBS dangles $40,000 bonuses to slow junior banker defections.
Yeah.
The bonus is about 30% of yearly base pay for new associates, Carol.
Which is why, we've had conversations coming off the financial crisis that bonus isn't necessarily a bonus, that it's just part of their pay, but it's just broken down.
Until they don't get it.
Until they don't get it. And then it's like, wait a minute.
Yeah.
So this is, it's expected to be a one-time bonus to its global banking analysts when they are promoted, doubling what some competitors are offering as lenders seek to reward younger employees weighed down by a surge in deal making. We saw it when the big Wall Street firms reported, M&A activity. We've talked about it. SPACs has created a lot of activity for the bankers, the sellers, the buyers. There's just a lot going on. The IPO market, there's been a lot going on, and we've seen a fair amount of deals this year already.
And all of that leads to a lot of people working a lot of hours. And one issue that we've heard a lot about from different banks throughout the last few months has been the idea of burnout.
Yeah.
And we've seen big changes happen at some banks and smaller changes happen at other banks. Among those things to address burnout has been, hey, here's some compensation.
And listen, it comes down to numbers for a lot of these folks. And UBS, as we mentioned, offering one-time bonuses that are double the amount that Credit Suisse and Wells Fargo have agreed to give their junior bankers. Other lenders, such as HSBC Holdings, are also moving to raise pay and shortening the path to promotion, while Houlihan Lokey has even offered some workers all-expense paid vacations.
Yeah, it's tackling that burnout.
Yeah.
It's happening in many different industries. At the same time, UBS, though, cutting jobs. The Swiss lender saying last month that it's taken a $300 million restructuring charge. That includes costs to cut jobs across different regions and business divisions. The bank not giving specific numbers, though.
Yeah. Some banks are also beefing up staff to avoid burnout. JP Morgan Chase said last month it plans to add almost 200 staff, joining Goldman and Jefferies in boosting headcount. So a lot of movement, a lot of trying to retain talent. They don't want to lose it because it's expensive to kind of retrain somebody and get them back in the fold.
I think we're going to see more of this.
I think so too. It is our most read story on the Bloomberg on this Monday.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We have about, under 13 minutes until the closing bell for the Monday session. Dow Industrial Average appears as though it is or will extend a record high, but we are well off the best level of the day. Right now, 34,845. The gain is only about 0.2%. We had been above that 35,000 level earlier in the day. The story really is the weakness that we are seeing in technology shares. They are being especially hard hit. The semis as a group down, if you look at the Philadelphia Semiconductor Index, by more than 4%. As the market continues to debate whether rising inflation will derail global growth, you have to look at the technology space in particular, given this group has a longer view when it comes to revenue. If you look at what's happening in the broader market right now, the S&P 500 is down about 0.8%. NASDAQ comp weaker by about 2.3% right now. Interestingly, long-term interest rates are moving up. 10-year Treasury picking up about 2.5 basis points at the moment, 1.60%. Energy is in focus today, given the fact that we've been discussing this Colonial Pipeline shutdown. The company is now aiming to return to service in this artery by the end of the week. So the plan is to restore deliveries by then, after the shutdown occurred following that ransomware attack. If you look at the active gasoline futures contract, we are now down about 0.1% here in the extended session. WTI crude oil a little weaker at 64.85. I'm Doug Krisner. That's your Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 minutes left in today's trading session. We're hovering near our lows of the session. That bigger gain that we saw in the Dow Jones Industrial Average running a little bit out of steam, but still holding on to a 30-point advantage. Both the NASDAQ, as you heard from Doug, and the S&P are down. The NASDAQ really taking it on the chin, down about 2.3%, down 310 points. Let's get into it with Steve Brown, Senior Portfolio Manager at American Century Investments, $230 billion in assets under management, co-manager on the company's real estate fund and global real estate fund. The latter, by the way, beating most of its peers over the past 5 years, returning on average annually more than 9%, according to Bloomberg data. Steve joins us on the phone in New York City. Steve, good to have you here with us. What's the market environment like for you?
It's been pretty good this year. Last year was a difficult year for REITs because of the lockdowns and the concerns about rent payments. But this year, they're acting a lot better. They're up about 15% on optimism about reopening the economy.
Well, it's a geographic story, though, right? Because it's all about where the economy is reopened and where it's not.
Well, for the U.S. fund, it's opening pretty much across the country, and we're having more success with the vaccines. And then both the Fed policy as well as the Biden administration are low interest rates and a lot of stimulus. That's good for the outlook for GDP growth. So we're seeing strength in a number of property sectors throughout the country. Certainly housing-related property stocks are doing well as timber. And then some of the bombed-out sectors like retail have bounced back very smartly this year in 2021.
Well, let's talk about retail, because Simon Property Group reporting after the bell today. And I'm wondering what you've heard and how you felt about the way that the company's talking about occupancy and the bounce back after just a terrible year.
Yes. So with Simon, they're the largest owner of regional malls in the country. And last year, there were long periods of time when their malls were closed due to state mandate. Well, that's shifted, so virtually all their malls are open and ready for business. Also, last year, they had, in the middle of the year, their rent collection was close to 65%, so quite poor. It's approaching 90% now, or through December 31st. We'll hear what happens tonight on the call. But we expect a further improvement in rent collection. And then thirdly, store closings in the first quarter of this year, first quarter of 21, were amongst the lowest in the last 4 or 5 years. So very little store closings. There were a lot in 2020, but very little in 21. And then leasing activity has been strong. So we think Simon can put up some good numbers and should have some optimism about the leasing progress for the portfolio in 2021.
What happened to the expectations that real estate was just going to fall apart, commercial real estate in particular, because of the pandemic? Why didn't it?
Okay. A couple of things. The concern was that working from home was taking off, and that some governments allowed rent moratoriums where people didn't have to pay their rent. So there was concern about policy having a negative impact on real estate values. As we moved into 21, firstly, the first piece of good news was sort of the announcement of a vaccine, whether it was from Moderna or Pfizer in November of 2020. That sort of turned things around in terms of that conversation. As we sit here in mid-May, the vaccine rollout in the U.S. appears to be successful. Governments are reopening. I believe New York State, New York City is going to be fully reopened by July 1st, so that's a positive and a change in mindset, getting back to living, you might say. And that's been good for real estate in the sense that there's more confidence in the ability to collect rent in a timely manner, and there's more confidence that things will go back to normal. Now, normal may not really come to fro till, say, the fall of this year, when many companies, whether it's in New York or Boston or LA, et cetera, will begin asking their employees to show up for work a certain amount of time, whether it's 3 days a week or 5 days a week. But you'll get more of that back to normal scenario, and that's certainly a positive for real estate values and real estate activity.
Sticking with retail, what does long term look like for companies that own and operate malls as retail shifts from? I mean, it's a story that's been happening. It's been going on for. Look, this is a long story now, right? The shift to e-commerce from brick and mortar, and the move, at least with brick and mortar, to experiences. What does it look like?
Sure. We're not overly optimistic about the mall sector long term. We think this year there could be a good bounce back, and Simon's the leading owner, so they own some of the most productive malls in the country. So they'll continue to gain market share. There will be some malls closing just because of difficult financial activities. But I think in terms of a Simon, it comes into the year trading at 13 times earnings. There's a lot of upside in their earnings power. So we like it over the next 12 months or so. Where we're more optimistic is in community shopping centers that are grocery store anchored, because they did pretty well during the pandemic, as obviously people, were busy going to the grocery stores or ordering pickup and deliver from the grocery stores. So their leasing activity is good. And we definitely like the long-term picture of open-air shopping centers.
So give us one in particular that you like.
One we like is called Brixmor. It's a New York-based REIT-owned shopping centers throughout the United States. So it's a nationwide portfolio. And they've been a beneficiary of the reopening trade. And they've been a beneficiary of, very strongly. Their earnings came out last week, and they raised guidance for 2021. They had very strong leasing activity. They showed a big improvement in rent collection, and they had very minimal store closings in the first quarter this year. So again, they were a beneficiary of those trends. And then grocery stores in general had a good year last year. They're looking to expand or sign new leases, so they should be a beneficiary of that trend also.
Let's talk Invitation Homes real quick. I'm curious, the long-term changes that you're seeing during the pandemic is more and more people are priced out of actually owning a home, and instead they choose to rent long-term.
Yes. So what happened over the last 12 to 15 months, we had the dramatic reduction in short-term interest rates by the Federal Reserve, and so mortgage rates went down to 3%, the lowest in 10 or 20 years. And that did stimulate a housing boom, partly because of work from home and lockdowns in cities. People were concerned about quality of life as well as access to good public school. So people moved out to the suburbs, bought homes. Home prices over the last 12 months are up 13 to 15%. So home prices have gone up a lot, although the cost of money is cheap. We're at a point now where it's obviously a toss-up between renting versus buying in terms of the cost. And with a company like Invitation Homes, which owns homes and rents them, demand has been very strong as people, as families, are priced out of the housing market, probably because they don't have the 10 or 20% required for a down payment. But the demand for their product type, occupancies are very high, and their ability to raise rents is very strong. So we're quite excited about single-family rentals, such as Invitation Homes, as well as traditional apartment companies like UDR.
All right, going to leave it on that note. Hey, Steve, thank you so much. Steve Brown, he's Senior Portfolio Manager at American Century Investments. They've got $230 billion in assets under management on the phone from New York City. He mentioned Invitation Homes, up about 18% so far this year. Little changed last year. Simon Property, which will report after the closing bell, was up nearly 50% so far here in 2021, down about 43% last year. So certainly we've seen, understandably, a bounce back, but we'll see what they have to say on their earnings call. All right, coming up next, we'll be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube, counting you down to the closing bell on this Monday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are about 2 minutes away from the end of the trading day. Romaine Bostick alongside Caroline Hyde here, counting you down to the close, here to help us take us beyond the bell. Our global simulcast partners, we're joined right now by Carol Massar and Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences worldwide to parse through the moments of the day. And the moments of the day, for a while, the narrative here, Carol, was the fact that you had the NASDAQ down significantly on the day. At the same time, you had the Dow Jones Industrial Average at a record high. That has now all been erased right now. All the major indices lower on the day.
Yeah, I was just going to go right there. What happened to that Dow record here? 313 points, almost 314 points at its high, the Dow Jones Industrial Average. But again, you could see a bunch of selling here, Tim, really in this last half hour of trading.
Yeah, though tech still the laggard, and the NASDAQ underperforming the other major indices. Tech just getting beat up. Commodity prices rising, equity investors increasingly concerned that inflation, these rising prices could derail growth of some of these high-flying tech companies. Tesla getting slammed, Apple getting slammed. Caroline?
ARC Innovation as well, the frothier parts of the market, even those call options coming down significantly in volume. It feels as though, well, some of the speculative corners of the market coming lower, but you're notable that the NASDAQ having its worst day since March the 18th. So we really are getting a pull down, even though volumes a little bit remain ticking higher on the day.
Yeah, ticking higher on the day, but as they tick higher, those volumes tick higher, you're seeing the prices go lower here. This is going to be a day of reversals here, not only reversals in the equity market, but remember, a reversal in the commodities space. We saw coming in today, oil was higher, gasoline was higher, copper was at record highs, iron ore, all that sort of got dialed back here as we got a little bit deeper into the trading day. You're hearing the closing bells in your ear right now. It's going to take a while for these numbers to settle, but here's what you're looking at right now. The S&P 500 right around 4188. That's going to be down about 1%. The NASDAQ composite right around 13,400. That's down 2.6%. And the Dow Jones Industrial Average, which as Carol was just talking about, at one point was up above 35,000, going to close below that, 34,745. That's down a fraction of a percent here, basically about 0.1%. We'll call it here. The Russell 2000 also lower on the day by about 2.6%.
Yeah, I was going to go right there. I mean, nothing could really hide here in the last few minutes of trading. As you mentioned, those small caps also taking it on the chin. But, again, it brings back, Caroline, those conversations about, the tech names that have had such a tremendous run, and you do wonder about investors just kind of pulling back. We'll see whether or not tomorrow they come back and think maybe there's a buying opportunity.
When you dig in, though, Carol, too, within the S&P 500, what was up, there are still some industry groups that managed to push on higher. I'm going to use a leaf out of Taylor's book, but she always called them the bond proxies. We are seeing utilities push higher, up 1.4%. Telecoms on the upside. Real estate, too, doing well, up 0.7%. Household goods, products, Kroger's, some of the retailers doing pretty fine when it comes to overall sentiment. They managed to cling on to the green, but overall what led us into the S&P 500 closing down by 0.6%? Autos, ugly. We're seeing autos off by more than 5 percentage points. Semiconductors, well, chip makers. It's interesting, guys, that both those auto companies and those chip companies once again getting a hearing from the Biden administration May 20th. We understand they're once again going to be trying to tackle the supply chain issue, but we're hitting it where it hurts. Technology, software, some of the names, Tim, Snowflake and the like, really on the downside. But Carol, I mean, we've got to dig into what were the individual names that were on the high and low side.
Yeah, and let's see if some of these names that I picked out as gainers are still gainers here at the closing bell. This was your number one gainer in the S&P 500. Viatris, and this is a company that had a first quarter loss, revenue increasing, reaffirming its 2021 revenue outlook. It was a top S&P 500 gainer, and it did hold on to that gain, up about 6.3% here at the close. Number 2 gainer, Live Nation. We talked about this last week. It's definitely one of your reopening stocks. It too was a top S&P 500 gainer, and Live Nation upgraded to buy over at Jefferies on valuation and recovery. They raised the price target to 96 a share, and you can see that stock up about more than 3% today. Home Depot, just wanted to mention, it was at a record high. It held on to that gain, so just a hair higher in today's session. And number 4, just want to look at MoneyGram. Romaine, putting that on his analyst call list. It's a micro cap. It's had quite a run this year, up 50%, gaining another 4%, Tim, in today's trade.
Oh, Carol, not that hard to find decliners today. Again, a tech story, specifically Alphabet, the parent company of Google, and Facebook, both being downgraded by Citigroup. Citigroup warning about the outlook for digital advertising. Both Google and Facebook were downgraded from buy to neutral. Google, Alphabet, I should say, GOOGL, finishing the day down just around 2.5%. Facebook down more than 4%, though. And then you have the Workhorse, the EV company, down more than 14% today. The first quarter sales missed estimates. They were light, and I should say they were really light. Investors reacting by sending shares significantly lower. Novavax, the pharmaceutical company, down more than 8.5%. Caroline, this after the Washington Post said the company may not look for emergency use authorization for its COVID vaccine until June. That would be quite the delay, Caroline.
Quite the delay, Tim. And for our TV, radio, YouTube audiences, we're now going to dig in kind of cross-asset, because I want to go to what is also falling when you look at the commodities space. Because what's so ironic is today we were all worrying about inflation, in particular, but spurred by what has been the powerhouse of the commodity super cycle. But today, well, actually, they kind of fell. We saw iron ore, one of the real areas of froth that we've seen of late, actually down 4% on the day when I'm looking at this particular part of the commodity spectrum. Zinc off by 2.3%, gas off by a percentage point. Interestingly, we had all of that worry about the cyber attack on that all-important Colonial pipeline that initially pushed gasoline prices up more than 4%, but actually they closed the day basically flat. Gas oil currently up 0.6%, Brent crude down by 0.2%. We weave in what happens on the foreign exchange, because usually when you get a day of pulling back on commodities, it's because the dollar is higher. The dollar did pair its losses, having really sunk on Friday on the back of that jobs report. Today it closed by about 0.1% lower. On the higher side, well, I'm in London, I'm going to talk about it. The Great British Pound, check this out, up a percentage point. Higher since the dollar since February. Why? Political risk just dying down a little bit. We had local elections. The Scottish independence vote looks a little bit further off right now. So British Pound up a percentage point, and I'm looking at sovereign bonds getting the bid in Italy. Yields down by some 2 percentage points, but in the US, yields actually pushing higher on the 30-year on the long end. Romain.
All right, breaking news. Brooks Automation to split into 2 independent companies. Of course, this is the semiconductor equipment maker. It makes a lot of tools for people to make semiconductor equipment. Is now going to split into 2 companies. One company that will be focused on the semiconductor industry, and another company that's going to be focused on the life sciences industry. Of course, a lot of people have pointed to biotech and life sciences as sort of the next tech, that this is the next big thing. Interesting decision to do this. Of course, this comes on a day where Brooks Automation dropped about 10%, excuse me, because of broader concerns here about what's going on in the chip space, as well as about valuations as well. Those shares right now in after hours trading are halted, but once again, Brooks going to split into 2 independent companies.
You know, you mentioned biotech, and that was certainly one name that we're seeing in the after hours trading higher. We're talking about Novavax coming out with their earnings. First quarter loss, I should say a loss, not earnings. First quarter loss per share of $3.05. That compares with an estimated loss of share of $3.60. First quarter revenues, a big beat, $447 million versus an estimate of $234. Keep in mind, in the regular trade, this stock was down almost 9% after Washington Post said that the biotech may not seek emergency use authorization for its closely watched COVID-19 vaccine until June at the earliest, but the stock trading higher in the after hours on probably that revenue number, Tim.
Yeah, shares up by 2.8% right now, just about $4.50 in the after hours right now. Let's talk a little bit about commodities and the surge in commodities that we have seen of late. Bloomberg Intelligence commodities analyst Mike McGlone coming on Quick Take earlier today, and again on Bloomberg Radio, Romain, saying that the cure for high commodity prices is higher prices. It sounds like, Caroline, he's repeating what Fed Chair Jerome Powell has said about higher prices, transitory. That's certainly what Mike McGlone thinks it's going to be. The big question is, how long is it going to last?
and sort of interesting takes on whether you're hedging against inflation by buying into commodities, and then that gets commodities to go higher. So then you worry about inflation that little bit more. But of course, ironically, on the day, commodities actually were lower in general. But that inflation number, I feel, remain that the whole market is anticipating Wednesday when that number, CPI number, is going to come out.
Well, it'll be interesting to see whether those inflationary pressures we've been seeing with regards to the inputs, whether that actually feeds into the consumer side. But when people talk about this being transitory, the thing is the companies aren't talking about it being transitory. Right. And you're hearing from a lot of analysts saying now that this is really much more structural, as a lot of the industrial metals are rallying not only because of the sort of recovery here, but also in this idea that the EV and the renewable energy space is highly dependent on a lot of these materials, and they need that if this industry is going to be what a lot of people think it's going to be, Carol.
Yeah, exactly. Hey, guys, just want to mention Roblox coming out. Roblox, excuse me. It's their first earnings as a publicly held company.
Are they profitable?
First quarter loss per share of 46 cents. First quarter revenue of $387 million. I mean, they've had quite a run. They're up about 45% from their IPO. And you could see at least first blush that investors liking what, again, we're just getting a few headlines on that company. Stock up about 1.4% here in the after hours. Caroline.
Investing in their business. The CEO of Roblox, David, really talking about how they're seeing long-term investments that we will be building on a human co-experience platform, Tim, that enables shared experiences among billions of users. I mean, Tim, you're our resident guy who knows all things gaming.
I'm no good when it comes to Roblox, but I got to tell you, this is absolutely has been huge during the pandemic. The big question is to what extent kids and older folks alike are going to continue to play it when we do not have to be inside as much. But the company's growth just over the past couple of years has been phenomenal.
I'm going to be outside. I don't know about you guys, but I want to be outside.
Not in your virtual world, Carol.
Yeah, all right, not in a virtual world. All right, that's going to do it for our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and Bloomberg YouTube, of course. We'll be back again, same place, same time tomorrow.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So I'm still digging into Roblox.
I want to call them Roboblocks. I don't know why.
Yeah,
Roblox seems like a fun game. Let's go. Hey guys,
it's like
let's
half
go play
Robocop,
Roblox.
half blocks, right? Average bookings per daily active user, $15.48. First quarter hours engaged, 9.7 billion. That's up 98% year over year, Carol.
Yeah, first quarter daily active users, 42.1 million. Yeah, exactly. So we're digging into some metrics. Quick check on that after hours trade and the stock. It's up about 2.75%. All right, you're going to go home?
I'm going.
All right, have a good night. We'll see you tomorrow. All right, right now, let's get a check on world and national news. For that, it's over to Karen Chase. Hey, Karen.
Hey, Carol. The pipeline problem could pump up gas prices 3 to 5 cents a gallon and could lead to more serious shortages of gas, diesel, and jet fuel at terminals of the pipeline in the southeastern and mid-Atlantic states. Some major airports, most notably Atlanta, are serviced by this artery, putting flights at risk if the crisis drags on. The pipeline suffered a cyber hack on Friday. Investigators believe a Russian-backed criminal ransomware gang called DarkSide was behind it. President Biden says the economic recovery from the COVID crisis is on track.
Because of the American Rescue Plan, forecasters are projecting we'll see the fastest economic growth in nearly 40 years in the months to come.
Speaking at the White House, the president said after initially losing more than 22 million jobs, the economy is moving in the right direction, and the disappointing April jobs number is just a snapshot that doesn't necessarily reflect a trend. Starbucks is thinking of shutting down its Facebook page because of haters. Company officials say every time they post a message with a civil rights or social justice theme, they get inundated with hate posts. NBC is refusing to air the Golden Globes 2022 show amid criticism of accusations against the Hollywood Foreign Press Association of an alleged lack of diversity. The group has no black members. The network issued a statement expressing hope that it will follow through on a diversity plan and they might be able to host the 2023 awards show. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karen Chase, and this is Bloomberg.
All right, Karen, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, and joining me right now is Doug Krisner. A couple of Amazon stories here on the Bloomberg today.
Yeah, where do you want to begin? I think the debt sale is really interesting because Amazon is joining a list of companies to go to the credit markets to raise cash. But what's interesting about this, Carol, is they don't really need the money at all, right? What are they going to use it for?
I don't know. Jeff Bezos' yacht? No, they're not going to do that. But it's just kind of staggering that these companies are tapping the markets, maybe because they can. We know that there's been a lot of corporate issuance because they can and there's demand, but it does make you wonder, like, why and where this goes. I mean, it's debt.
It is debt, and I think they're going to use the money to buy back stock and also at a lower rate to refinance the debt that they already have outstanding. You mentioned Amazon. Apple recently offering more than about $200 billion worth of new debt to the market. We had, $14 billion in new bonds. Their total cash and marketable securities worth $200 billion. I misspoke. And Oracle pocketing another $15 billion by selling debt. So it's obviously a good time to raise money. If inflation expectations begin to move higher, you look where kind of real borrowing costs are basically at zero, because if you have the nominal rate, which we talk a lot about, I mean, the 10-year Treasury right now at 159, you subtract the rate of inflation. As inflation expectations move higher, the real cost of borrowing drops.
Yeah, it's pretty remarkable. I love this story by Nick Baker and Molly Smith of Bloomberg News, and they say with soaring inflation expectations driving real borrowing costs down to basically zero, as you just said, Doug, for many corporations, debt issuance has entered the why the heck not stage in the United States. I mean, this issuance by Amazon, 8 parts, or in as many as 8 parts. That's huge.
Yeah, this is one of the things when we were talking a couple of years back about the Trump tax cuts and the fact that a lot of that money was being used to buy back stock. This is another criticism, that they're raising money in the credit market basically to buy back stock and nothing more.
Yeah, I guess cash and cash equivalents on the Amazon balance sheet standing at about $34 billion at the end of March. So not too shabby. Doug, thank you. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We had weakness in the equity market. It's kind of interesting because while the tone was risk-off through much of the day, the deterioration seemed to gather force in the afternoon session. We had the Dow at one point trading at an intraday record high and above 35 grand for the first time. We settled at 34,742 with a loss of nearly 35 points on the day. That takes us down from a record by about 1/10%. We also had the S&P down from a record as well. Through the day, markets were really debating the threat of rising inflation, and not only how it would negatively impact a rebound in growth, but what it would mean for tech firms in particular, given their longer view on revenue. And it was the weakness in tech that showed up in the S&P 500 with a drop of 1%, and the NASDAQ composite, which was off nearly 2.6% today. As long as we're talking technology, semiconductors, very hard hit. The Philadelphia Semiconductor Index today was down more than 4%, and the SOX is now below the 100-day moving average. If you're a technician, a noteworthy point. Alphabet and Facebook slump after being cut to neutral over at Citi. The firm saying strength in internet ads was very robust in the past 2 quarters. However, Citi says that growth is likely to decelerate given a difficult year-over-year comparison situation in the quarters ahead. 10-year Treasury last quoted in New York at a yield of 1.59%. I'm Doug Krisner. That's your Bloomberg Business Flash.
It's like the air was let out of the balloon for the equity markets.
Yeah, kind of.
Right? Just at the end.
Yeah.
All right,
What
Doug.
a way for a week to begin, right?
I know, it feels like a Monday. All right, Doug, thank you so much. Well, shares of Avaya Holdings, they, though, have been on a tear this year. When I last checked before the close, up more than 40% year-to-date after gaining more than 40% last year. The business communications, software, and cloud company also recently reported earnings, cutting its fiscal year adjusted EPS forecast, at least against estimates. Let's bring in Jim Chirico. He is president and CEO of Avaya, joining us on the phone from Raleigh, North Carolina. Jim, nice to have you here on Bloomberg. How are you?
I'm doing well, Carol. Thank you very much for having me on.
Well, it's great to have you here. Tell me a little bit about the business environment and what the last quarter was like and what you reported against.
Yeah, so first of all, we had a really solid quarter. Last quarter was our fiscal second quarter. Really represents a significant amount of work that we've done over the last couple of years and how we structurally changed the company from a sort of a hardware company to one that is a cloud company. And we've spent a lot of time reshaping our portfolio and our capabilities to really regain our leadership in enterprise communication and collaboration. So very excited about the results. We had our 4th consecutive quarter of year-over-year revenue growth. We set a record for the company as far as ARR, up 31% sequentially, 400% for the year. 66% of our revenues now are recurring, and 90% of our revenues are software and services. So we've done a great job in structurally changing the revenue of the company.
Well, a lot of questions. So 66% of your revenue reoccurring, as you just mentioned, that gives you pretty incredible visibility, I'm guessing.
Yeah, it does. Obviously, it's great from a predictability perspective. You go back 2 years, we were in the low 50%, so really a great transition. But really what's most important about ARR is the fact, recurring revenues, it really shows the diversity of our one cloud platform. And, you know, whether that's across verticals, customer segments, deployment models, it really shows the strength of our differentiation, relevance, and innovation. And, you know, we're a portfolio company and we're one of only a few that provides the capability to do cloud across premise, hybrid, public, and private. So we're also a global company. We're in 180 countries around the globe. So breadth and scale goes a long way for us as well.
So a couple things. First of all, cloud. I mean, we talked about it so much, I feel like, over the last couple of weeks, especially as all the big tech reported, and you know some of the behemoths that are out there, whether it's Amazon, whether it's Google, whether it's Microsoft. But listen, one thing I've learned is that there's just more and more demand of cloud. How do you fit in against such big players?
Yeah, you know, we actually are the leader in cloud communications and in large contact centers, obviously complex, large enterprises. 90% of the Fortune 100 use Avaya to run mission-critical applications. Clearly a real differentiation for us. We've been in the business for years, so we have a really strong, trusted, and proven customer base, the largest install base with over 100,000 customers, more than 100 million seats out there in the marketplace today, and the fact that we continue to gain market share. So we're pretty excited about the opportunity, especially how the market's coming into our core technologies and really driving innovation and AI capabilities in contact centers.
Listen, and you guys work with, who's who of customers that are out there. And, so you are seeing all different kinds of industries. I feel like over the last years, it's safe to say that, business communication, cloud became more important than ever. What did you see as a change in your business that gave you some idea of maybe what the future holds?
Yeah, unfortunately, obviously where we've been the last 15 months or so with the pandemic, but on the flip side of that, it's also proved to be a real driver for our technology in the marketplace. And we're seeing long-lasting structural changes as a result of the pandemic, really moving to, changing human behaviors, work from anywhere, how customers are dealing with commerce now, sort of your contactless experiences. And what were emerging technologies 15 months ago are actually mainline technologies today. And Avaya is well positioned from a commercial opportunity to unlock the opportunity. We're working more and more with our customers to help them through this digital transformation journey. And we continue to bring on new and new tech capabilities into the marketplace. So we're pretty excited about the opportunity. We're delivering more innovation to the market faster than we ever have, and it really gives us confidence for continued growth.
Hey, just got about 40 seconds left here. You mentioned selling into 180 countries. You do have a vantage point in terms of the cross-section of industries that you work with, types of businesses. How would you describe the global economy right now? And just got about 35 seconds.
Yeah, from in our business, it's strong. Clearly, as you take a look at some of the larger complex installations in Asia and a couple of the European countries, it's been a bit delayed, obviously with the resurgence of the pandemic. U.S. is very healthy. Many of the European countries are healthy, and I'm starting to see now sort of a resurgence back if you look at the APAC countries as well. So overall, quite strong.
Great to check in with you, Jim. Thank you so much. Look forward to doing so again in the future. Jim Chirico, he's Chief Executive Officer of Avaya Holdings, on the phone from Raleigh, North Carolina. As I mentioned, it has been on a tear last year, also this year. You're listening to Bloomberg Business Week. Trust Barometer from Edelman. We'll get the latest right here on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So he talks with lots of CEOs. He surveys their consumers, their customers, keeps track of it all, and then puts it out in the Edelman Trust Barometers. The latest one talks about what's going on when it comes to business and racial justice. So we're going to dig into it with Richard Edelman, CEO of Edelman, in just a moment. First up, though, back to your top business stories, some of the news after the close. Here is Doug Krisner.
Yeah, we'll get to the after the bell news in a moment. The tone today, definitely, Carol, I think you'll agree, risk off a deterioration that seemed to gather force in the afternoon session. At one point, the Dow was at an intraday record, and we were above 35 grand for the first time. But at the end of the day, it was not only the Dow, but the S&P that were down from record highs, with the Dow Industrial Average finishing at 34,742. So we were down today by 0.1%. The S&P 500 falls 1%. NASDAQ comp down nearly 2.6%. Really, it's a lot about the weakness in the high technology arena. A lot of focus here on whether rising inflation is not only going to derail the global growth story or perhaps interrupt it, but the inflationary pressures and how that might impact tech firms, given their longer view on revenue. You know, it's interesting that we've seen the buildup in raw material prices and commodities. Well, today a Fed survey indicating the one-year forward measure of consumer-level inflation now at its highest level since September 2013. And bear in mind that this week we get the CPI data. Semiconductor shares especially hard hit today. The SOX was down more than 4.5%, and we are now below the 100-day moving average. And as long as we're talking about the chips, we are told Commerce Secretary Gina Raimondo is planning a summit to deal with the global chip shortage. Invited will be the largest chip makers along with U.S. automakers. Now, today we heard from Dallas Fed Bank President Rob Kaplan. He seemed to soften his language somewhat when it comes to adjusting monetary policy. Kaplan told us substantial further progress is needed before beginning the conversation on tapering asset purchases.
I voted for that in December. I've supported it consistently. We need to get to substantial further progress before we can start to taper. And we'll have a debate, of course, around the table about what constitutes that fine.
Now, it's very interesting because last week, you may remember, Kaplan argued for beginning the conversation about the Fed taking the punch bowl away, so to speak. 10-year Treasury up a little more than 2 basis points today, last quoted in New York at 1.60%. We were talking about after the bell news. Virgin Galactic shares right now weaker by more than 3% after reporting a first quarter loss that was wider than a year ago. I'm Doug Krisner. That's your Bloomberg Business Flash. Carol.
All right, Doug. Really appreciate that. So only 1 in 3 Americans surveyed see America making progress on racial justice over the last year. That's the finding in the latest trust barometer that is out from the global communications firm Edelman. The barometer this time around looked at business and racial justice in America. Let's get more on what the report found. Joining us right now is the founder and CEO of Edelman, Richard Edelman. He's back with us on the phone in New York City. Richard, nice to have you back with us. How has the environment, the business environment, evolved in the past 12, 13, 14 months?
Well, I think on systemic racism, there's an increased height of the bar. You know, a year ago, it was companies just saying, or ads for brands saying, you know, how sorry we were for the murder of George Floyd. That's performative. Now we're looking to companies to actually make a big commitment, a big difference. And, you know, otherwise, it's just not going to work. You know, basically, there's such an opportunity for business here to talk to its employees, all of whom are looking for serious action on more diversity on boards, more diversity in senior management, change in the supply chain so that you use Black and Hispanic small businesses. And also, they want CEOs to speak up on voting rights bills. I mean, how is it that we pass legislation in Florida and Texas that restricts people's right to vote? I think it's a great thing that we had record voter turnout in this year compared to any election since 1900. But that's not what some others see.
Well, and I have to say, it was a little surprising, I think, on some level that maybe Americans didn't think we made more progress. Dig a little bit deeper into some of the data points. One that came out for me, just 31% of people of color, Black. We're talking about Latin Americans here in the United States, Asians, see brands as doing enough to redress racism in their communities. I mean, that's a small percentage.
Well, Carol, the big thing that changed in this last year since we last did this study is that corporations actually jumped about 12 or 15 points. Brands were flatlined. Mm-hmm. So, again, the idea that corporations have made some progress in their hiring and in promotion of people of color, but a big change, the Asian Americans. They have seen record levels of violence, and all of a sudden, 60% of them say the business community is ignoring problems of racism against Asian Americans. So this is a big new constituency that we have to pay attention to and do something to help.
Well, and what's interesting is the constituency is doing something, right? And they are stopping using a lot of brands, right? If they don't agree with how certain companies have responded to systemic racism.
Wasn't it amazing that 42% of the respondents said they've actually changed brands?
Right.
If they don't stand up and speak up. And I think a good example of doing it the right way is Dove, where you see that, for their Dove men's, they showed on the NCAA men's finals a ad that showed African Americans who'd been basketball players who've gone on to great careers. And it says, see African American men for who they are. They're politicians, they're business people, they're teachers, they're not just jocks.
Right, exactly. Well, what's interesting is, what is it that Americans or consumers or customers want businesses to be doing? Is it transparency, in addition to taking action, but then showing, the results of such?
They want to change the game. Example, KFC put a $100 million fund together to enable African Americans and Hispanics, especially, who are store managers, to be able to become franchisees. Mm-hmm. They had a very low percentage of diverse owners. And so they've changed it by putting up the equity money such that then that man or woman can go to the bank and borrow the money, then become a franchisee. That puts them on the train to success. And otherwise, these sort of financial hurdles make it impossible to create step change.
Sit tight for a second, Richard. We're going to come back and talk, because there's one statistic that talks about the number of Americans who believe CEOs themselves are deeply racist, and that number might surprise people, but we're going to get into that in just a moment. We're going to come back with Richard Edelman, Chief Executive Officer at Edelman, coming out with their latest trust barometer that looks specifically at business and racial justice in America. In the meantime, back to World and National News, back to Karen Chase with that. Hi, Karen.
Hi. The owners of the largest fuel pipeline in the nation are pledging to get it back online in a few days after a cyber attack that forced it to halt shipments of gas and other fuels, raising the specter of shortages if local reserves run out. Colonial says the pipeline from Texas to New Jersey is being brought back up to speed in steps to ensure safety. Meanwhile, President Biden is vowing to find and bring to justice the cyber hackers. Bloomberg's Irv Chapman has the details.
The president said he takes the ransomware attack very seriously.
My administration will be pursuing a global effort of ransomware attacks by transnational criminals who often use global money laundering networks to carry them out.
The president was asked if Russia had any responsibility.
So far, there is no evidence from our intelligence people that Russia is involved, although there is evidence that the actors' ransomware is in Russia. They have some responsibility to deal with this.
The president also spoke on the improving economy and reminded workers of the law that says if they refuse a suitable job offer, they lose unemployment benefits. In Washington, Irv Chapman, Bloomberg Radio.
Maybe the government doesn't have to raise the federal minimum wage to $15 an hour. Chipotle is doing it voluntarily because it can't get enough people to work for them for less. As Elon Musk was trying his hand at comedy on Saturday Night Live, his image and likeness were being used to promote Dogecoin giveaways on social media that left unsuspecting people out $5 million. In one of the oldest tricks in the crypto book, people were lured into sending gold coins to previously unknown accounts with the promise they'd be paid back multiple times. In fact, they were preying on Musk's followers who believed he'd make a big Dogecoin announcement on the show. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Karen Chase, and this is Bloomberg.
All right, Karen Chase, thank you so much. You're listening to Bloomberg Business Week. Carol Massar in our Interactive Broker studio. Joining me is Bloomberg News anchor and Daybreak Asia anchor, Doug Krisner. And Doug, playing a little bit of pulling an audible here because the story...
you are indeed.
Keeping you on your toes. But it fits into the conversation I'm having with Richard Edelman
You're
right now.
You're absolutely right.
And this is about NBC dropping the Golden Globes after criticism over diversity. They got a lot of criticism over it.
They did. And, you know, the Hollywood Foreign Press Association sponsors the Golden Globes, if you can say that.
Yeah.
The decision really is not a surprise. I mean, they've really been under a lot of criticism for several months, given the lack of diversity among the group.
Yeah, exactly. And listen, it's not been an easy few months for the world, but also for the Hollywood Foreign Press Association. And listen, there's a lot of pressure on them, right? And I'm reading from the story by our Kelly Gilblom, who says that there's pressure on the membership of the Hollywood Foreign Press to enact reforms before next year when the network will make a call about whether the show can return in 2023. Listen, this fits into Richard Edelman, a CEO over at Edelman, talking about their latest trust barometer. And, you know, consumers, companies, Americans are stepping up and not either purchasing a product or service from a company when they feel like that business has not stepped up when it comes to systemic racism in our society.
And then you get some reporting like the article that was done in the LA Times and the Bloomberg piece that you're referring to. It really kind of serves a hat tip here to the LA Times reporting, which published a piece that was rather long form earlier in the year highlighting the lack of racial diversity among the foreign correspondents who make up the Hollywood Foreign Press. So, I mean, this has been gathering a lot of momentum, and rightly so.
Yeah, exactly. I mean, they apologized. The group's top leaders apologizing at this year's February Golden Globes broadcast, saying we must also ensure everyone from all underrepresented communities gets a seat at our table. Listen, you know, Doug, we talk about it a lot here, and it's certainly as a result of the past year where companies are having to put out policies and investors are watching increasingly.
You're absolutely right.
As well. Doug Krisner, thanks for going with me on the Audible. I really appreciate it. All right, you're listening to Bloomberg Business Week on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
It was definitely a risk-off day in markets today, especially where high technology shares were concerned, and the deterioration gathered force in the afternoon part of the trading day. At one point, the Dow was actually in record territory. We traded above 35 grand for the first time and established an intraday record. But both the Dow and the S&P were down from record highs at the end of the day. At the end of the day, we had the S&P down about 1%. By the way, the Dow was off about 0.1% today. The weakness in technology shows up and sends the NASDAQ comp down nearly 2.6%. A lot of concern about the negative impact of rising inflation, particularly when you consider that infotech firms have a longer view on revenue. That was a culprit. We have seen inflationary pressures building in raw materials and many commodities, and now the most recent Fed survey shows the one-year forward measure of consumer-level inflation now at its highest level since September 2013. By the way, we're going to get the CPI data midweek. A lot of weakness in semiconductor stocks today, with the SOX down more than 4.5%. We are now trading below the 100-day moving average. At the same time, Alphabet and Facebook were lower after being cut to neutral from buy at Citi. The firm says strength in internet ads was very robust over the past 2 quarters. However, Citi goes on to say growth is likely to decelerate given a difficult year-over-year comparison paradigm as we move forward. 10-year Treasury last quoted in New York at a yield of 1.59%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, got it, Doug. Thanks so much. Well, let's get back to Richard Edelman, Chief Executive Officer over at Edelman, on the phone, still with us here in New York City, talking about their latest trust barometer that looked at business and racial justice.
Okay, traders, I'm going to place my stop on profit for euro even to better position to 121.47, and I will see. I probably will hold overnight this position because first of all, we're in profit and well in profit. Stop, I will still hold stop at 121.47. We will see if it will close position at 121.47. I will end up in quite good profit. If it will move lower, I will close tomorrow or after tomorrow, and at the end of the day, broker pays me for holding overnight because this is short position. Okay, guys, I moved my stop on profit from 121.52 to 121.47. It gives me 10 pips. So all of you guys who follow this trade, please move further. Your stop on profit, keep close eye on what's going to happen after 10 o'clock, because sometimes the broker will put spread quite wide to about 10, 11 pips, and it might get filled. Your order might get filled. I hope it will not, because it's already 121.32 and I don't want to move lower. We will see if the price will go higher than 121.40. I will close in 8 minutes. I will close my position. If it will not go lower, higher, sorry, I will still hold this position. So overnight, I will see what's going to happen. Okay, guys, stay safe, and I'll speak to you tomorrow. Have a nice evening.
Get to the next level. And I think it's fascinating that more than half say that workplace racism has damaged their employer relationship, that it makes them less loyal, less advocating, less trusting. I get it. So that's why it's really important for employers to take a stand against racism.
Well,
they have to stand up.
Right. And let me ask you, because I always tee you up because this is the truth. You're talking with CEOs all the time of really well-known companies across industries and globally. So you've got to be having these conversations with them. What are they saying about what they're trying to do to change, that when you do a survey that it comes out very differently and much more positively?
Look, it's hard medicine to do boycotts of states that pass legislation that's racially discriminatory. But it's that kind of push. First of all, political contributions. Second of all, move your operations out or reduce the number of people you have in the state. Business has a lot of clout, and there's big, broad support for CEOs to act in this regard. Like more than half said they want states to be boycotted if they are passing these bad legislation. So we've got to make sure that CEOs put their own house in order, but also take responsibility for the broader society, because too many state legislatures are just acting cuckoo.
Is it disappointing to you, especially in a state where, take Georgia, and I'm not going to name names or anything, but I mean, where very prominent CEOs maybe or companies didn't necessarily sign commitments or maybe step up a little bit more aggressively than they did?
I think that the smart move for CEOs is if you haven't your headquarters in that market, you should be not just lobbying sort of behind the scenes, but explicitly and out in public, because that's really what it takes to move legislators at the moment. We can't do the sort of inside the house only. It's not going to work.
So, again, because you had these conversations, Richard, I do wonder. So, I don't know. Because these are not new conversations. You and I have talked about this, right? This is not a new problem. It's just really kind of slammed us all in a big way over the past year, and rightfully so when you see something like what happened to George Floyd. So where do we go from here? What's the timeline? Do you see progress happening?
I see tremendous progress in the recognition of the problem. But I think especially, Carol, brands have to speak up and stand up. Brands have to do more than just change the actors or actresses. They have to literally get behind areas in which there's intolerance, like what kind of hairstyle a young lady can wear to school, or that's just indicative of what's possible. And brands have huge money in which to affect public behavior.
So I'd be remiss if I didn't ask you, because you do talk to so many and hear about what's going on in the world. How do things look right now from a market perspective and from an global economy perspective?
I think there's cautious optimism. I think that the level of vaccination is quite strong, but there's real fright about India, Brazil, the idea that there are new variants. So there's real caution about traveling, especially business travel, and also about coming back to real estate. I'm in my office today. I think we're 5% of the people, and I rode the subway this morning, and at 8:30, there was nobody on the subway car. So we have a long road back, and I really hope that New York City and others take September 1st as a sort of demarcation point, but have to prove to people that, in fact, it is safe to ride the subways and other.
If you had to say the biggest concern among CEOs, corporate CEOs right now, global corporate CEOs right now, what would it be?
Trade with China, I mean, and also instability related to that relationship China-U.S. And also the kind of political dynamic, which is deeply divided, and business people just want to get on and do their work. But if they're not going to get the right answers from staying out, then they have to get in.
All right, we're going to leave it on that note. Listen, thank you so much. We always get to a lot of ground, and I really appreciate it. Richard Edelman, he is the founder and CEO of the global communications firm Edelman. They're out with their latest trust barometer here in 2021, special report looking at business and racial justice in America. All right, we've got Monday in the books, and it was quite a wild one where we saw a record in the Dow run out of steam, the major market averages finishing at their lows of the day. Coming up next, Sound On. For the whole Bloomberg Business Week team, I'm Carol Massar. This is Bloomberg.